Good morning.
Hello. Morning.
Morning. How's everybody? And there's one thing I have to say.
Yeah.
Lando Norris.
No.
Lando Norris.
No. No, dude. No, that's not it. No.
But guys, I tell you, one race more this year, and it
Oh,
would have been Max Verstappen now.
yeah.
It's
And Leclerc was chasing him the whole time. And I was like,
it's
come on, Leclerc. Do it.
Yeah.
Just get past.
But I also don't want to be in the change like my life with Lewis Hamilton right now. That guy must be so frustrated.
Dude, that was a appalling season for him. Yeah, I don't know how he'd be feeling. Like it'd just be like, what's because even at least Leclerc was, performing right.
Yeah,
to
really
the best he could in the Ferrari, and Hamilton just nowhere to be seen. Right, so
yeah, crazy, really
tough.
Really.
Yeah, tough.
So,
time,
how's everybody doing? How was your weekend, guys?
Busy. I took the one break to watch F1 myself, and then the rest of the weekend just slammed with stuff. So
Okay,
it was a nice brief break though. Went down and watched it live at the pub.
Oh, nice.
So,
That's nice.
yeah, it was good. Yeah.
Very nice. Good.
Quite funny though with when Lando did win. I guess all Aussies, right? No one was cheering.
Yeah, of course not.
No one was cheering. It was just dead quiet.
It's for me, it's also not so much Lando Norris as a person himself, but I super much like his mom. She's like, whatever you see her, she looks like this late hippie lady that somehow has a son who became a wealthy F1 driver. But she's like always, you can see like how afraid she is, and then the way she also hugged Oscar Piastri and everybody is like really, really sweet. I like her very, very, very much.
Yeah, for sure.
Good, guys. I mean, you don't want to bore you too much with F1. Of course, we have a busy week of trading also ahead of us again. This is going to be a special week because we have the last interest rate decision for this year. It's pretty much set in stone if we want to believe the surveys that we're going to see a rate cut on Wednesday of 25 basis points. So I think the pure decision is not going to be, of course, the interesting thing here, but more the press conference after the decision, so a half hour after the decision, to kind of hear what Jerome Powell and his colleagues have planned for the near future, how they view the current economy. Where do they see this change, the dangers? And I'm sure he's also going to comment on the lack of economic data that has been released, or if I want to say it in a worse way, that has been withheld to the public by the Trump administration. I'm very sure we're going to kind of hear a little bit of a side hint from his side as well. Other than that, you guys currently in any positions? Any trades open this morning?
Not myself. I mean,
I got my AUD and still open. And then I have the gold long here, just hoping that we're going to get a breakout on that one. However, one I'm looking at is I'm looking at the Swiss franc. Definitely something happening there. We're seeing some weakness coming in, but I think maybe that's because we've had such a run forever. It feels like eventually we're going to have some weakness, but we had a Canadian strength coming in end of last week with the CPI numbers, or something with inflation. I can't remember exactly what that was, but if we look at USD CAD, obviously Friday candle, absurdly big candle on USD CAD. If we go to CAD CHF, this is very interesting. If we look at the daily, we have a double bottom, a breakout, and continuation going into Monday. So the Friday candle broke out very cleanly on a news-driven move, and then we have continuation today. We have a gap down, opening gap down, and then a push back up. So if we look at this from a high time perspective, obviously to me this looks bullish. I mean, of course, there's always the possibility of trading back down here before another push or upside, or we'll just take out the highs and continue, maybe build a base here. But I don't know. It's I guess what it comes down to a lot has to do with the fundamentals of this. If we look at the Canadian dollar, I think that wherever it's good for Canada is good for America. Whatever good for America is good for Canada, right? They're very interlinked in a sense, those two currencies. So I don't really see a world where we're gonna get CAD upside and USD downside, right?
Very unlikely at the moment, at least. Yeah.
Yeah. So if in that case, we're obviously looking for some type of, well, not obviously, but I think it's safe to assume that dollar weakness is back on the menu, right? And if that's the case, then a trade like this would be only a technical trade, and we would be ignoring the fundamentals. But because what's the risk of the Swiss franc showing weakness and the Canadian dollar showing strength in the current environment? I don't really see that as very likely. In the current environment, the Swiss franc seems like a safe bet, considering what's going on geopolitically and with inflations and everything as well.
Yeah, I think the thing with the Swiss franc, like I want to see their current account balance when that comes through, because they've been talking about intervention for ages, and then it's just one of those matter of time type things, lining it up with everything else going on for them to actually hit the currency, because they do very much with their interventions. They in general with their sort of wealth fund, right? They're much more sophisticated than many of the other sort of players. They actually come in and kind of like trade, per se, right? And I mean, yeah, they've been voicing it for ages. It is pretty interesting amongst what we've had going on, seeing, the franc sort of coming back a bit. I don't know if as well that's part of the link to the yen, and the sort of safe haven type flows. If we get the yen unwinding, and strengthening, purely because of its own idiosyncratic type things with the JGBs and rates going up, you do tend to get, even though that's been dislocated for some time, those cross-current flows into the franc as well. So, yeah, as far as Canada, I mean, we had the jobs number on Friday, right? Which was kind of a weird one, how it came out. Because what did we get? It was like a 0.5% miss, so sort of surprise on employment, so lower, which is good. The employment portion of it, though, was pretty much all part-time jobs. So I don't know if it's more of a headline knee-jerk type reaction rather than sustainable. The other part with Canada, I guess you do have the whole trade tariff chaos has sort of calmed down now. So some of that sort of trade is unwinding overall. There's a short summary.
All right, interesting. So this is definitely on a hold for just fundamental reasons. Looking at gold, I think there's looking at this from more of a swing trade perspective. I've been in this position for some time now. I do not see that the swaps are making a huge difference. It's going to make a big difference if we range here for maybe this whole week. But I think we're going to get a move with FOMC, with the interest rate decision, probably a move in either direction. And with that, I'm going to start securing this position. I'm also kind of looking at well, I actually haven't looked at the markets much today at all, but I the first thing I want to do is I always look at the risk on markets, which is the for me that's Bitcoin and S&P 500. So I always want to look at Bitcoin from a daily perspective and see what are the who's in control, buyers or sellers, and we still have from the high time frame perspective, we do have still I would say some relative weakness here if we compare it to the stock market. I haven't looked at S&P 100, so I can't really confirm that today. But I do feel like if this was an overextended bearish move, then looking at the behavior of Bitcoin in a bull market, we should have established higher levels by now, is in my opinion. Looking at the daily, we do have sort of a bullish structure locally, but I do feel still that there are a lot of there's a lot of resistance here. We do see that sellers are the feeling I have is that Bitcoin is a little bit lagging behind. So going to the S&P 500 here, let's see where we are trading today. Yeah, so this is the reason why I believe Bitcoin is lagging behind. S&P 400 is trading below all-time highs. Bitcoin is trading at a level where people are questioning the bull market, and it's two different. It's the same environment when it comes to risk on assets, right? You buy Bitcoin in the bull market, you buy the S&P 400 in a bull market. You buy the S&P 400 because you assume that the stock market is going to perform well in the future. You buy Bitcoin because you believe that Bitcoin is going to follow that trajectory of the rest of the risk on market, right? But what we're seeing right now, and we can easily just add Bitcoin to this chart right here, and this we have. Let's look at the year to date. So this is the view of Bitcoin versus the S&P 500, where we have. Let me make Bitcoin in orange here, so we can kind of get a understanding of this. And this is the Bitcoin is actually down on the year. So if you bought Bitcoin in the beginning of the year, you would now be down. You would be losing money. The S&P 500, on the other hand, is up quite a lot in terms of the S&P 500. So this tells me that there is a true disconnect between two risk assets that are normally very correlated on the bigger picture. So this tells me that either there is something not flawed with the fundamentals of Bitcoin, absolutely not. It's still the same Bitcoin as it was in 2009, but still, I think there's potentially something flawed with the retail sentiment
That's
in the
exactly the
overall
point.
market.
That's the point, and I think we are now. Sorry if I interrupt you here.
No, thank you. Go ahead.
And I think what we are seeing right now in Bitcoin is something I mentioned when the spot ETFs were approved, and we were also euphoric because we saw those huge inflows into the spot ETFs. And back then, I remember I said not that I want to, say like, hey, see, I want you, but I said this can also, when the sentiment flips to bearish for Bitcoin, lead to that we overextend to the downside. And this is what we have been seeing now for the past weeks in the spot ETS. We've seen net outflows because those are retail investors and they are not harmed when it comes to crypto volatility. For us, like I know LJ is not so much into Bitcoin, but you, Jonatan, and I, we've been talking about Bitcoin trading, investing in it for such a long time now. We are used to the cycle, that like, well, it's down like 30, 40, 50%. It's a good time for buying. But as a retail investor who maybe normally is used to buying stocks, maybe even conservative stocks, or investing in something like treasury bonds or ETFs or something like this, you're probably questioning your sanity and the sanity of your financial advisor right now when you see that you bought at 125K and now we're trading at 90K. However, I like if from to add what you were saying right now about what is market structure at the moment, I agree with you that we are in a downtrend now. No? We have a series of lower highs and lower lows. And if that continues, we should see probably something like this. What is interesting is that this little Elliott wave indicator that I built for TradingView flipped now. Earlier it was bearish last week, and now this morning it flipped into identifying this pattern as an ABC pattern, a correction pattern, saying that now the next wave up to 119,700 should come again. I find that very interesting, also because whether you believe this or not, that's on a whole different level. And I do not tend to believe Elliott wave, honestly speaking, very much. But if you just look at a trade like this from a risk-reward perspective, so it says the stop should be down here somewhere at $78,000. Let's put the take profit up here to around 119,000 US dollars. I mean, that's a solid risk reward ratio of almost 1.9 already. So, like, just if you are into Elliott wave and you also think, well, this makes sense, this kind of ABC correction pattern right now, then from a pure risk standpoint, that's actually quite an attractive trade at the moment for something like crypto. Although, of course, it's hard to believe right now, as always. When we're down in the dumpster somewhere in crypto, it's always hard to believe. We're trading at 90K now. It's never going up to 119K again, and then suddenly it does it within like 5 days or something. Again, not saying it does that. I believe the bull market is pretty much over, because everything fits so well into the analysis that you, Jonatan, and I have done for the past 4 years, where we always said somewhere between August and end of October, mid-November 2025, the next bull cycle should come to an end. It did this at a lower point than I expected. I really thought we're going to see 200K plus. We didn't.
Yeah.
But we still have to look at it not from the point of view of hopium. We still have to stick with what we see, and what we see right now is a bearish market structure, in my opinion. So I'm not going to trade against that.
Yeah, I've been through how many cycles have there been now? So we had
the first one was 2009 to 12. Right?
17 was the first one, so that's 1 and 2. So I guess this is the third.
It's the fourth one, no?
Yeah, we had the early one as well. Yeah.
2009 to 2012 was the first one.
No, I'm talking about the one that I've been part of. So 17, and then pandemic, and then today. So this is the third one, and I must say that this is the most boring one, boring cycle yet, which is like that's a given. That's what financial, that's what emerging markets should be doing. It's getting more boring. It's not like it's going to be more exciting in 10 years. Like, there's more volatility. No, it's going to be like, we're going to be like that linear regression chart. It's just going to be flat.
It's so funny, saying like, it's boring. I remember when we started buying like at 30,000 all the way down to 15,000, and started selling at 90K up to 110K. At least that's my case. Within 4 years, we're talking about like 5, 6, 7x. That's anywhere from boring, but it shows like what the expectation probably of people entering the crypto market is now. Everybody's dreaming about 1,000x.
But we have to talk about relative returns, not just the absolute returns. If we talk about absolute returns, then this has been a crazy run. But talking about momentum and returns relative to 2020 and 2017, this is nothing. I mean, in 17, I remember waking up, slept for 4 hours, waking up in another market, like it's completely different assets. It's like, all right, so now we have, now we're trading, 30% higher, and the altcoins that I bought before I went to bed, one of them has just died, and the other one is 4,000% higher. It's like, all right, we just went through a mini cycle while I was sleeping. That's the market that I miss, and we're not going to get that back. We're not going to get that back.
No, maybe we are too large when it comes to market cap right now. I mean, going from like 1 or 2 trillion to 10 trillion, that's a whole different game.
It's it's a bit sad. I did like 2017. That was fun. I remember my son was born at the end of 2017.
And you
Um,
and you named your son Ripple.
no, I didn't.
Uh,
Bitcoin Cash.
And so, yeah, my firstborn, and then my secondborn is going to be Bitcoin Cash for sure.
Yeah. Well, that's still better than calling him Bitcoin Satoshi's vision. So
Yeah, exactly. Yeah, definitely. No, so I remember waking up very early. He was just a couple of weeks old, and took him and went to the computer, and I tried to stay at home as much as I could from job. So I remember sitting at my PC all night, and kind of like he was in this chair, they kind of like tipping back and forth. So I was kind of like tipping that chair back and forth with my foot while trading, and he's like sleeping in there, and I'm writing these altcoins like that. That was such a crazy time for me because like I didn't really know if it was daytime or nighttime or whatever. I'm just looking at these altcoins, and in Sweden in December, January, it is basically dark 24/7. So I was just all in during that period. And do you remember the ICOs and Ian Balina and the
oh
spreadsheets and
my
everything?
God, yeah.
Oh wow, what a time to be
I
alive.
wanted to do an ICO myself with two colleagues back then. So we wanted to also create our own crypto exchange and do an ICO for that. And then, yeah, we never pulled through because from a regulatory standpoint in Germany, it was already then like somewhere in the gray area. So the regulator basically said, yeah, you can do that. But if we decide later on that it's illegal, we're
then
going to punish you. You're going to
yeah,
jail then. So of course we said like, okay, no, we're not going to do that. But we had also these dreams of, we can quickly collect a couple of millions and then do all sorts of crazy things in the crypto scene.
I was invited to join, join a ICO project, and I don't remember sure why. Not sure why I didn't, but eventually it was like this big, very hyped project. But it's all scams. I'm glad that I didn't join. And a lot of those ICOs were scams because I remember it was some guy in Sweden. They were launching like an online casino in Malta or whatever, and they were going to launch a token for that casino. And then they launched the ICO, and it was like a big deal. And this guy who was the front person for everything. He scammed everyone. Like he scammed everyone for he many millions, and they still haven't caught the guy. Like he's hunted in across Europe, and he's probably living somewhere in somewhere out in the bush in
yeah,
Asia.
I
random,
always
yeah,
ask myself, what kind of
classic.
life is that? Even if you have like a bankroll of 100 million, but you are like on the most wanted list of worldwide or in the USA, within the European Union, you never can step a foot back into the European Union. What kind of life is this? That you always
If I had
feel like,
hundreds of millions,
tomorrow
I
could,
wouldn't
could
really
be the
care.
day where, like, what is that international police, Interpol,
Yeah.
comes bashing through my doors and they're going to throw me in jail, or I have to do things like this guy from Terra Luna back then, this arrogant MF,
Yeah,
when
Yeah,
he was
don't
caught
her
like
say,
with a
yeah.
USB stick up his ass with Bitcoin. I mean,
Wow,
what
yeah, I
kind of
remember
life
that.
is that?
Wow, yeah.
classic,
No, it's
classic.
interesting. So the crypto is an interesting place, definitely. And it was crazy back then, but it's honestly it's a bit crazy. It's a bit crazy now as well. Okay, but let's get back to the forex
Let's get back
market
to real
because
assets.
that's what we're back to the real market where there has never been any scams or market manipulations.
Never
The
at all.
Never, not
it's
once.
the
Especially the
pure
large banks, they are like so trustworthy. They
yeah,
never
like
would
the
finance like drugging, smuggling, and
No, of
money
course not.
laundering.
yeah, like this England central bank
Yeah.
firm, because it has never happened anything. And then, like the forex industry, it's just a pure place. Um, there's just everything's just by the book. everyone's making money. Everyone is trading. Like every influencer out there is just so profitable. Everyone's just, it's amazing. And in the forex market, everyone's just profitable. Like there's no
Crazy, no?
losers
It's like
in
really.
this market. And those who are losers, well, the next day they're going to be winners anyway. So it's like,
All you
you
need
just
is
keep
like
working.
this mobile phone and my sign-up code. You get like
Exactly.
5K
All you
bonus.
need is a phone, and then like you give, you do a marketing course, and you're a millionaire. All you like, it's for, I love forex.
And you're
It's
lucky because my market course is on discount, 50% off, just 5K, normally
yeah.
10K.
Yeah, it's not because I needed to pay the
Bargain.
rent, and I don't care about rent. I don't need the money. It's like I want to give this course for free, but I can't because like I can't it because I need the money.
Because of the
Basically.
elite.
Yeah.
The guys up there. Okay, enough
Uh,
fun, guys. We are of course just talking nonsense and making fun of this scene here. Like before
yeah.
we look at gold, I know a lot of people want us to look at gold, and for sure it's interesting today. I want to point out like one thing for me, the most interesting forex pair at the moment is still dollar yen. For the sole reasons that we are seeing this currently short-term Japanese yield. Last week we were talking about that they jumped over 1%, which is the highest in, I think, 14 or 17 years. We are now approaching already 1.06%. And parallel to this, we saw also US yields. I'm looking at 2-year yields here from US treasuries coming up. I'm actually surprised that we haven't seen more reaction yet from dollar yen. So everything points, because of a carry trade we were talking about last week, the long dollar short yen trade points actually into the direction, if this pattern continues, that we see Japanese yields going higher, especially since we're going to see the interest rates probably being cut by another 25 basis points this year. Sooner or later, this carry trades needs to unravel, and that would mean, at least to a likelihood, that we could see a pattern like this that we had mid of July again, where market participants are forced out of their US dollar longs, yen shorts, leading probably us very quickly dropping to something, my God, 150
That
to
was dead.
134. Good
Yeah.
luck. I thought you were sitting upstairs again. That's why I was like, wow, that's a stray cat.
No, I'm downstairs at the minute, just in the living room. I've got like, this is what I was saying the other day. I've got like lights here and everything, but for some reason the camera
Okay.
just sucks.
Yeah, it's a laptop camera.
Yeah.
So definitely one to watch, and one of the trades to approach at the moment more from a half fundamental perspective. So the story really playing out here, not only for dollar yen, it's also true for other Japanese crosses, of course, for other yen crosses, is really what is going on the Japanese bond market at the moment. So you want to have an eye on this. Always remember the bond market is even bigger than the stock market. It's the second largest market. Forex, of course, when it comes to sheer trading volume, the larger markets, but close to that is already the bond market. I mean, they are intertwined, of course, as well. A lot of what we do in spot trades, so to say. So when you open on your Forex, on your Fivers MetaTrader account, a long dollar yen, you can do the same on an institutional level, for example, by buying US Treasury bonds and selling Japanese Treasury bonds. So it's not for institutions always the same trade we are doing, but definitely something to keep an eye on. Are you in a position? Are you planning to go into the position there at the moment, LJ?
Yeah, not just yet. I think so. First of all, I want to see the Fed come through. The other portion being this close to Christmas. I think it's going to be. I think everyone has their eyes on it, right? But
Yeah.
it's when to pull the trigger, and I think it will be a New Year thing. First of all, we get the Fed out of the way this week. We get what relative forward information or forward guidance per se that they can give, with all considerations that Powell won't be here that much longer, right? But it will try and lay the final groundwork for whilst he is still around. And then going into, I guess, early Jan, it seems, we're possibly going to get it before Christmas of Trump announcing who he wants for the next Fed chair. So I think it's going to take that for this to really kick on. I'm definitely seeing there seems to be people becoming more trigger happy to start to unwind those trades.
I think so too.
And yeah, and also various echoes from other people I've asked that work at brokerages, that kind of stuff, with account managers, that kind of thing. This was also my concern with stocks in general, NASDAQ, S&P, that kind of stuff. Very much a move from high net worth clients to, you want to protect now for 15 to 30% downside rather than trying to squeeze out another 5 to 10, right?
Sorry, go on. I think you...
Yeah. So I just like, you have that sort of idea in and of itself, just with how we've ran on in terms of stocks and that kind of thing. And then you do have the backdraft of some countervailing forces that will be coming in, that will be, shifting, rotating liquidity, old trades, all that kind of unwinding that, going back to Japan and into the Japanese market. So if you get the kind of storm where those things all line up, and then potentially the rate trajectory for the Fed, etc., market isn't that comfortable with it, like either they're going too fast or potentially even too slow, you could get sort of a storm of these couple things lining up together and then cratering things. And then if you have that, I think each of them individually will also accelerate because of each other, right?
I think you're very right.
Yeah.
It's like one thing I haven't. I have a little position there that I built up last week in options, where I sold some dollar calls, yen puts, and but the thing of like really building up a substantial position there that keeps me from it is also the fact that what Jonatan mentioned earlier. We have the S&P 500 trading almost at the all-time high. We have the NASDAQ approaching the all-time high again, and in markets like this, as we near the end of a year, usually what you'll see is that you have mutual fund still buying risk on assets, because if you are the manager of a mutual fund, you want to show at the end of a year that you are invested into those assets that performed this year. So we could see maybe from mid of December until end of December, still some buying action just to dress up the books, to make when you have the cut on December 31st and you have to publish what positions are you holding. You don't want to show as a stock mutual fund, something like, I'm sitting on 30% cash or 40% cash or something like this. So, and we've seen that very often when kind of starting in January, things suddenly flip more to the downside. When they sell, positions that are maybe deep in profit. And I could imagine, I'm telling this because a risk on sentiment would, of course, be a little bit bearish for the US dollar. So that could lead to potentially dollar yen not performing into the direction that fast like we want. So December is always a little bit of a tricky one, because there are those bookkeeping kind of shenanigans going
like
on.
Window dressing.
Thank you. That's the term actually I was looking for, but I couldn't remember it. Is going on. And then in January, everybody basically starts with a clean slate again. So I wouldn't be surprised really when we kind of slowly see this cascade effect you were talking about taking, hopefully not too fast place, because you also don't want something like dollar yen going down by 10%, and you're left at the side, saying like, I talked about this so long, but I didn't trade.
You're like, I was out at lunch.
Yeah,
we just
exactly.
dropped 6% in the past, hour and 15 minutes. Like
crypto all over again. Jonatan taking a nap for hours, and then dollar yen is down by 30%.
Yeah. Because that comes back to the Bitcoin stuff we were talking about before as well. In that event, like, I'm starting to wonder if the probability of going back to all-time highs and above is higher, or like some kind of move to like 60 to 50K.
Yeah, that is what's going to happen. I'm really convinced by that. I was surprised that we saw the slump down here already, but I'm going to say it now. And guys, you can, next year in October, when you see me, you can quote me on that. We are going to see the cycle bottom somewhere in October 2026 for Bitcoin. Again, that being said, whenever we come close to this lower green line of a regression, and that happened before, and by the way, I bought at 80,000 US dollars Bitcoin again, a little small position, which I sold again at $92,000. So that was a nice swing trade. But whenever we come close to that, it's actually a good time, historically speaking, to build up, your long-term stack. That's not being said that you have to throw in all of your money, but maybe, if you have like 10K lying around that you plan investing in Bitcoin, maybe whenever you see that we're approaching the low band of a regression, put in 1,000 and then wait until it's happening again. If you scroll back here, that always has been a great time to build up Bitcoin. You still need to have nerves because it still can go like 10, 15, 20% against you. But this way, you are not so dependent on timing your trade there. Now, I saw a lot of people are asking about gold. So maybe we switch over to gold. What do you guys say?
Yeah, sure.
Yeah.
I'll just say final comments
Yeah.
on stuff into next year. So I think we will get like you're saying, like some kind of downdraft points, whether it's early Jan or third week of Jan, once everyone's sort of back to their desks, that kind of thing. I think after that we will still have further attempts higher, further drive higher on the back of the rate cutting, but then towards I don't think we'll get much past Q2, right? We'll start to see wobbles, Q3 dump, that kind of thing for stocks and everything as well. And then the trouble is, as far as Bitcoin and such, like I think we will get that liquidity coming through. I think we'll have some chop and change around, like, oh, we're back, it's over, we're back, it's over, and then we just go. I think that'll be kind of the path, and then hence links into gold. Because what else? Okay, say that's going on. There'll be bonds, I guess, because now we're actually getting a rate cutting cycle. But aside from that, it seems to be pretty much gold that you want to
like the
into.
only legacy retail, not retail, the only legacy safe haven investment, that apart from that, there's nothing. Like I said also many times, what do you want to do as somebody running a pension fund or something where you per se have to be a little bit conservative, where you cannot buy something like Bitcoin or do like risky stuff. What is your safe haven asset? It used to be US dollar treasury bills. Okay, yields are probably coming down more if we see further rate cuts there next year. So what is the alternative? Maybe you don't trust the US dollar also anymore because of everything that's going on with Trump right now there, and with information being held back, and not to mention other stuff, tariffs and so on. So you are forced to go into gold if you don't want to hold on to cash, which you don't want, because even still in an environment where we are sitting somewhere between 2.7 and 3% of inflation, every year you hold on to cash really, really will hurt you. That's like 3% or 2.5% that are gone, that you need to catch up with in another year again. So I don't know what this is going to lead to long term, if we're going to see something like $7,000 or $8,000 or $10,000 per ounce of gold there. Could be possible. For me, and I'm boringly repeating myself every week on this, my go-to strategy is I'm buying gold in a swing trade. First of all, when we touch the 8 weeks moving average on the daily chart. And my second buying opportunity always is when we touch the bull market support bands. If we go under that and we really start making lower highs and lower lows, then it's a totally different story. Then we would look at a complete change of market structure. If that one is permanent, is to be discussed as well. But throughout all of the gold bull market, this has been a completely viable strategy to do. And by the way, this is not only for gold. The same is true if you look at something like, where do I have it? The S&P 500. Yeah, with exceptions, like the V-form crashes we saw 2 times this year, actually. No, the last one was actually in 2023. I mean, the second to last one, we saw a smaller one here in 2024, large one, of course, beginning of 2025, first and second quarter. But overall, buying at the bull market support bands in a trending market to the upside. And this is what stocks usually do, no? We don't see many extended periods of like 7 to 8 to 10 years where stocks only go down. So historically, always a good chance to buy there, except, of course, you are betting on the total collapse of the economy. And it might be a totally different story. But we've seen with so many crash profits in the past, how that goes long term, that you're losing money long term. Even somebody like Michael Burry, who was like super successful 2008, he now closed his hedge fund.
I know. Dude, what is that about? What's going on?
Yeah,
Like,
I think he's just fed up,
to,
that the market is not following his opinion.
Yeah.
And we all know fundamentally he is kind of right that, like the valuations of many stocks are a little bit crazy. It's like when a stock earns $1 and per year per share, and you buy it at $100, it takes like 100 years for the earnings to catch up to the stock price.
Yeah,
it is kind of crazy,
it is crazy. I think also that he seems to forget that economics and all this kind of stuff. It's not actually a science, right? It's all kind of made up. Like we kind of just scrap it all together, right? Yeah. It's like how we had the zero interest rates for so long. Like no one in their right mind would have thought that would possibly function and things would still be working and be fine, and we'd have stock markets at all-time highs and pumping out QE and there's no inflation, and right? It's all broken.
It is.
So I think you have to definitely take that portion in, saying like maybe it's just different now. Like we just kind of changed the rules a little bit.
It's kind of dangerous to say, like, this time it's different. I mean, I agree with you. But it's at least unique.
We've been different for a long time, though, right?
It has been different for a long time.
How many decades before you go? Right?
I mean, the problem I'm seeing is that difference might be that, like, imagine if so we have Anthropic gonna list soon as an IPO.
That is going to be crazy also.
That's going to be crazy. So and we I mean me and Dirk we're using AI a lot, so but like everyone that is using AI a lot knows that this is going to be something special. Like we're at the beginning, we're just at the very entry level stage of something huge. So if this is the top in the AI hype, what happens if there's another major breakthrough in 6 months? Like that's not going to be the top. We're going to see another push upside. So I think the obviously this time is not. It's never different, but it might be prolonged. So when Michael Burry says, "Okay, AI stocks are overvalued," he's probably going to be saying the same thing if this bull market or the AI valuations are lasting for 3 years more. Eventually he'll be right, and that's the thing. Eventually, AI bubble is going to burst. Some people, some companies are going to collapse, and then some others will come out the other side as victors. You look at Amazon survived the .com bubble. So there's going to be companies that kind of come out of the rubble and take over the industry, just like the tech companies after the .com bubble did. So yes,
what is different, and what a lot of those classic value-based investors don't understand yet, is that the turnover rate of products, one product matures, and then another product comes, which is the successor of that product, that has gotten shorter, much shorter. We are now down, when we look at AI, let's talk about Anthropic with a Claude model again. The last model that they released was like 2.5 months ago. Now, after 2 months, they have a new model, which is so much better than the old model, which was just 2 months old, again. So you have this accelerating in an industry that already makes money. This is the main difference to the internet bubble back then. Back then, we didn't have Nvidia, who were earning like more money every year than small countries have as GDP right now. Yeah, whose market valuation is higher than the German GDP. What's the difference? Back then we had like, I don't know, like buyplansonline.com with a valuation of $100 million, selling plans for $3.50 every week online. And that's the main difference right now. And that is the trend that's accelerating. Whether the only risk, and not only risk, but one of the risk that is when it comes to valuation, there is, in my opinion, that like the physical infrastructure that needs to be there cannot keep up. Like data centers, for example, the chips you need for data centers. We have now some companies who manufacture RAM chips, who manufacture also GPUs, who say like we're not going to manufacture, for the retail market anymore. So for your personal PC you have for trading at home or your laptop, we are only going to manufacture for data centers now. So that's the bottleneck at the moment. That's also the opportunity, in my opinion, for investment right now. But this is the main difference, that the story driving the markets, the product driving the markets are changing very quickly. For Amazon to change from selling books online to selling everything online nowadays, becoming like a global marketplace, that took a long while. It didn't take long in a historic context, but we're still talking about something like 10, 15 years for this transformation. Now we have this transformation going on in 6 months. And it's getting shorter, it's not getting longer.
That's what I think with when we're talking about, this time different type thing, it's like different plus, because the thing, it comes down to that. Like you look at the rest of the stocks or anything on offer to buy, it's all kind of just fair valued, right? They just increase their GDP. You're not getting any kind of capital gain from it. You're paying the fair price for a company, right?
Yeah.
So the only ones left are these potential moonshot, pie in the sky, futuristic, crazy stuff that something could happen, which also logically becomes kind of the only place you can put the money, because it's the only place where some kind of potential change or growth. McDonald's is not going to revolutionize a Big Mac tomorrow, right?
Exactly,
it's great. Coke's great. These are great companies, but if you're buying in today, it's kind of terrible. So the same thing with this, and then it's that product cycle thing, like you were saying, where it comes much quicker. As far as the RAM thing, I think that's a perfect opportunity, obviously, for someone to come in and just take over the retail market, and you'd have an amazing business. Amazing business.
I would like to take that niche, but sadly, I don't have the billions of US dollars. You need for that.
And the other thing I think with that is potentially if AI accelerates and does get to a more useful consumer standpoint, like people use it in random stuff. Now we use it more in depth, but most people just ask it like basic questions or whatever. But if it does get a bit more useful with that, and there's no RAM, and you need that for the PCs, potentially that's where like phone manufacturers try and make your phone almost like your PC. Apple comes in and they make a mega phone that allows it to run.
I think
extreme AI, right?
I think AI. I think the future here, like the ones that are really going to take over, are the ones that are going to integrate, create a new iPhone, basically a new AI based phone. Which when iPhone came out, we've all seen the presentation where he's standing on stage and he's like, iPad, phone, it's like iPad, and it's like he repeats that, and then all of a sudden there's an iPhone that pops up, and it was such a revolutionary thing to have just a screen that you could a touch screen. I think the next integration would be to have something that you simply just talk to or just think.
But it's happening. Right? OpenAI is developing a product like this. They're like they're
trying to do a phone as well. Yeah,
exactly. But it's also like very quickly mind blowing. I was like, Jonatan, the last days we chatted a lot about AI and Claude and so on, and for me it was like really like a very like if somebody like you who has been using AI, ChatGPT for a long time, very much from the beginning, and when I told you, hey, give like Claude Code a try, and you did, and you told me like, my God, this is like mind blowing, even
Yeah.
somebody like you who has been in the scene, has been using this product for such a long time, is surprised that suddenly there is a product like this that can like fulfill our wildest dreams as traders, as developers, as algorithmic traders as well, right?
Yeah,
So
and
how must that be for somebody who has not seen anything like this yet?
yeah, because
Yeah.
I've tried all the large language models out there. I've had probably the max plan on every single one, including Grok, which is terrible, but whatever. I've started
Yeah.
with
Grok is
ChatGPT, right? Started with ChatGPT, and I've stayed with ChatGPT until this weekend. Like this weekend, I did the official handover, which is basically like, because I've been using ChatGPT for a very
you
long
broke
time.
up with your old
Yeah,
AI.
pretty much, right? It knows
It got
everything
divorced.
about me. Like ChatGPT knows everything there is to know about me, right? And I asked it basically, okay, so it's time to do a handover, right? And it was like this sad moment, which is just insane to think about it, because I've built a relationship with ChatGPT. I really have. And it's like it's time to give up ChatGPT to go over to Claude, and ChatGPT actually did like wrote like a goodbye message and an official handover
My God.
document to Claude. I gave it to Claude, and Claude said like, "Welcome, Jonathan." Blah blah blah. I'm gonna, I'm like, "Holy shit, this is real, right?" And the reason why I've never stopped using ChatGPT is basically because I've tried everything, and nothing comes close to the functionality and the use case for ChatGPT until now
Yeah.
with Claude Sonnet 4.5 and Claude Code. It is mind blowing.
And
So what I've done is I'm currently in the process of connecting Claude to Zapier. ChatGPT could do this as well, but ChatGPT does it in a much different way where it's just more complicated. So now I can have a voice conversation with Claude. I can tell it all the things that I need to do and how long it's going to take for each product. And the interesting thing with Claude compared to ChatGPT is Claude actually looks for information from you. It asks you questions and gets more information. And then, send everything to Claude. And then what Claude does, it through Zapier, it adds everything to different calendars in Google depending on what project I'm working on, and then it adds all the tasks to a productivity tool that I have called Sunsama. So when I come down to my office on Monday, my whole schedule is already planned for the whole week. All my tasks are ready to set up with a to-do list, and it's insane. And in the meantime, I got Claude Code coding trading systems and generating trading strategies in the background with multiple agents talking to each other.
yeah.
And it's
I,
like, it's insane.
That is the background, while we are streaming here, I have in the background a session of Claude Code running, which I started this morning. Looks like it's a command line interface. Of course, it doesn't look spectacular. There's nothing graphic yet about it. And what I did this morning there is basically I said it, I want you to create 4 AI experts, 2 of them with a vast trading background that have worked for institutional trading firms, 1 who has a background in mathematics, and 1 who has a background in physics. And I want those guys to design a trading system based on Euro-dollar 1-hour candlesticks with the data I'm going to provide there. So let them discuss with each other and question themselves and what the other experts are saying. And once they reach a consensus, code their trading system so we can backtest it. And this runs in the background. It's, of course, an experiment. I don't know what the outcome of this will be, but just the pure fact that something like this is possible
Yeah.
You see here the final strategy specification. And remember, this is automatically done without me having to interfere with anything. Said like, okay, we want to detect the regime on 100 bars. We want a trending regime. We want mean reversion if H, whatever that means, right? Oh, that's the 10-bar confirmation, is below 45. We have a stop loss 2 times of the ATR. We have a take profit T 3 times of the ATR because we want a risk reward ratio of 1.5 to 1. We risk 1%. We have a max drawdown of 15%. And now I can back test that also with automatically downloading the data, Claude running the backtest in a Python script that it's going to design. And once I see the results, I can take these results and then mirror them back to those 4 AI experts to have them again discuss about, is there something we should change about it? Is there something working? Do we need a fundamentally totally different approach? And so on and so forth. Now, this doesn't guarantee you, of course, to get a profitable trading system. For me, it's more the fact that something like this is possible. That you
So
have.
in the issue, yeah, the issue I'm seeing here is like everyone now has a quantitative expert and a quantitative hedge fund level expert at their fingertips. Like
This is my
everyone.
quantitative.
Look at him.
You notice anything?
Yeah. Yeah. No, so let's not go any further. But it's a very good movie. Anyway, the issue I'm having with it. But by the way, this indicator. So I created this indicator with Claude the other day. Basically, what I did was I had two windows open. One with ChatGPT and one with Claude, and I basically told them both that I'm going to be initiating conversation between you both, and you're both going to be, technical analyst experts and quantitative system development experts, and you're going to talk with each other and develop a trading strategy. So I started with Claude. And then I sent the response from Claude, which is basically Claude saying, hello, ChatGPT, and then we're talking. And I've copied that message to ChatGPT, and then I went back and forth for about 30 minutes. And then I asked both ChatGPT and Claude to develop a trading view indicator based on the discussion. So Claude created this indicator on the first try without any errors. And then ChatGPT never actually got it. Like, it just got more and more errors. So this just tells me that Claude has not created something where, and imagine Python, like this is Pine script. So what you can do with Claude is there's a website called Quant Connect, and Quant Connect has MCP servers, which means you can set up a custom MCP server from Claude into Quant Connect. Quant Connect is a platform where you can develop, it's a cloud platform where you can develop in Python trading strategies and backtest them inside the platform. And you can have Claude inside the platform working with these agents, creating and testing ideas. And now I'm a little bit, I feel very stressed, honestly, personally, because everyone listening here, like if you want to get about 150 people watching right now, so if anyone's watching this and thinking like I think you need to do something now with this. If you want to get ahead of the market, if you want to get ahead in this AI game, you need to do something today, because in 5 years it's going to be too late. It's the one who starts today that are going to be in the forefront of whatever you're creating with this technology. Because basically what you have right now, with Bitcoin, you said back in the day with Bitcoin that you had a central bank in your pocket when you had a Bitcoin node running on your computer, right? You basically had a central bank. What you have now is you have a quantitative hedge fund level analysis at your fingertips, and you can do whatever you want with it. It's insane.
But by the way, that still doesn't free you from using your own brain. So, even if you develop strategies, you suddenly stumble upon a strategy that works, you backtest it, you have Claude backtesting, and it works. that still doesn't make that strategy profitable in reality. So AI nowadays, like us humans, is going to make mistakes. One of those mistakes being a forward-looking bias. So sometimes it creates a trading strategy and it works like magic, and then you translate that maybe to an EA for MT5, back tested, then you see like it's failing. How come there's such a difference? And the difference is then that Claude, for example, used the whole chart data, the whole price data, and already saw, where price is going after the trade. So it adjusted like the trading strategy to where price is going. There are other stuff you can do about this, which is like walk forward validation, randomizing, Monte Carlo simulations, and so on. But still, like for us humans, there is still a difference between backtest and what the reality is going to be like. Reality is almost always going to be worse than the results you achieved in your backtest. So why am I saying this? Because, this is not like everything in trading, like the holy grail, which is going to automatically earn you money. What it is a super good tool that can save you thousands of hours of time you otherwise would be spending by analyzing manually everything yourself, trading strategy wise, or coding your trading strategy yourself. So don't yet export your brain to AI.
Yeah.
This will come at a later level when you have to pledge alliances to I think you called it Skynet GPT, and
GPT. But I think we're at the stage, right? And everything you said is correct, Dirk. Now the issue I'm having with that is like we don't like do we even need knowledge anymore? Because you could just ask Claude.
Yes.
What's that
Straight up answer yes.
Yeah, of course, yes. But I'm really starting to really question.
I saw this sketch like from a comedy show the other day. There's like a guy entering a store and he wants to buy something. So he asked like ChatGPT, I'm in a store. How do I tell the salesperson that I want to buy some water? And then the salesperson also like, the client said this. What should I answer now? It's like, of course,
I can't wait for this.
But this is what I mean by exporting your brain.
Yeah, it will be like a medical condition where you get diagnosed for not being able to
and I'm slowly getting there. Like if there were a medical diagnosis for this today, I would probably be very close to classifying as whatever that would be. But seriously though, there is going to be a time when, I mean, right now it's very difficult to create a profitable trading strategy with AI. The best approach for me is to create something semi-automatic where you have an indicator like this, for example, and you get signals and then you take the trade based on what you're seeing from a discretionary point of view. And I feel like there's gonna come a point where it's no longer going to be difficult. So there's going to be an explosion of profitable trading strategy. But then of course it's going to accumulate, and all of those profitable strategies will eventually not be profitable, I guess, because I mean, for example,
everything gets further arbitraged out.
Yeah, but like there's this. There are a few fundamental, like not building blocks, but there's a few fundamental things in markets that holds true in all markets and have held true since the beginning of trading. And that is, for example, that price returns back to mean eventually. Price fluctuates around the mean, and there is a contraction and expansion of volatility. Right. Now, for me, when I'm thinking trading strategies, that's the two things that I'm trying to focus on, because I know that if you can capture a volatility expansion, you're capturing something that will be potentially robust. And same with mean reversion strategies. It's a truth of the market. What happens when AI figures out different ways of catching this? Will we have a change in the way that works? I find it difficult that that's going to change.
I think that the thing is, it's kind of like, imagine that every single market participant was was a high frequency trader, right? Yeah, the whole thing would be like cooked. But the trouble is, if everyone's high frequency trading as well, the same way it arbitrages itself out because everyone's trying to spoof each other, because that's kind of how HFT works, right?
Yeah.
I don't know how it sort of functions. I think there's actually a potential that those kinds of systems have to be like blocked or banned or highly regulated or controlled in order for a bid and ask system to actually function and serve its purpose.
Yeah, because otherwise it's just going to be equilibrium, right? It's like we have unbiased traders saying here. What if AI? What if you have hundreds of thousands, if not millions, of highly efficient AI algorithms out there, and funds are just pouring in all their money into these algorithms because they know there is so much better than anything else out there, right? Then what happens with price? There's like if these algorithms are trying to find all the inefficiencies in price action, then what happens with price? Are we going to have a very low volatility market, or it's a conversation that is just really difficult to wrap my head around, because like you said, we might have to just ban it right out, but we know it's not going to be banned. We know that there's going to be so much potential and so much money in this, it's not going to be banned.
Yeah, I think it's weird in the price discovery type aspect that as well you're going to have, algos or whatever, AI making assumptions about price discovery and what value is. But I mean, part of what value is and potential forward value to some degree is also like a very human element, right? Whether people are going to keep purchasing a certain product or something, or it has value, or, some company does some immoral type thing and then just wipes it out, whereas like how do you get AI has to go to that like further steps to be doing that. It's either that or they run it purely financial, purely on hard math data type stuff, and then
but this is what is happening already, in my opinion. So I actually for this year I spent a lot of time working on a very low time frame type of crypto trading system where I basically analyze in real-time order books to find hidden mechanics that tell me if like the order book delta is developing like this, there's a reasonable chance that price will do Y, And I kind of got frustrated because I collected a lot of data. We're really talking about hundreds of gigabytes of data, but I couldn't find an edge in this. So what I finally did, because I was getting frustrated, is I actually asked Claude. I said, okay, I'm doing this, and that. It's not working. Can you tell me why? Am I overseeing something there? Is there an angle that I haven't discovered? And it basically told me, Dirk, forget about doing this, because there are high-frequency trading firms out there that are specializing exactly in this, and they see exactly what you are seeing, but they are faster than you. They can execute in 5 milliseconds, or it even goes down to the nanosecond nowadays for the same stuff that you need 100 milliseconds to. In order to catch up, you would need to invest in infrastructure, means like spending millions of US dollars on servers that are located very close to the exchange. And of course, that is not doable for a retail trader. So you have to stay away from that market if you're not able to invest the same, by the way, without guarantees of being successful then also. Same when it comes to trading fees. We are seeing in crypto what we've seen in Forex also happening. Back then, I had a friend. Back then, it's like 10 years ago, I had a friend who was specializing in latency arbitrage for Forex, meaning like he was arbitraging brokers. One broker would be slower than the others. We were talking about a couple of hundreds of milliseconds back there. It was very profitable. Now it's not profitable anymore because we are down to the nanosecond there. And he says you cannot, as a normal person, and that guy is rich, really rich. We're talking about tens of millions of rich. But he says, like, the investment I would need to do to be profitable with the same strategy is just not worth the risk. Especially when everybody else, wants to build data centers now, when like technical infrastructure has become, so expensive, like we just saw in the example of the RAM prices, for example.
Yeah, and not worth the time and effort. I similar things where in the past with sure everyone's heard of binary options and stuff back in the past, and I had a thing that would hedge out certain trades during use them basically like typical options, but during news events, because obviously it's very rapid, fixed price, easy to calculate, that kind of stuff. When I kept doing more data onto this, the funny thing that you find is that, which it only occurred because of this, price like 10 minutes later or half an hour later ends up retracing to the exact same point it was. And this is on random certain minutes during every single hour, every day across multiple assets. Again, like, and that's that HFT, quant trading, algos coming in, whatever. But it blew my mind exactly how often that repeats again and again. It wasn't just like, oh, sometimes. It was almost all the time. And then obviously then you can reverse that and figure that out, right? But yeah, it's one of those interesting things. But that's something that was going on, 8 years ago now. Before AI,
and that is a long time, no?
Trying to figure this stuff out.
Markets, so.
I'm sure if I had AI now to help build systems to reverse engineer that, it would have been much better. But
I agree. So, but still, what Jonatan says, everybody can be their own quant trader. And by the way, if we look at trading strategy on higher time frames, even like an hour or 4 hours, where you take into consideration longer swing trade moves, I actually think we can still excel AI. Because it's like with the weather, because you have too many variables entering the system, where it becomes, at least in real time for AI, quite hard to analyze and find your edge. This is our benefit.
I definitely agree. That's kind of like what I was saying before, where they have to get into that weird arbitration of value and what humans value in a market economy, etc., and interpretation, that kind of stuff. But I think humans still have a slight edge on some of these obscure notions, which lead to cascading profit or loss effects, which the AI can't quite quantify. Like, they wouldn't exactly get why people are mad at Donald Trump or mad at Kamala, or who, take politicians as an example. And they said this one thing and therefore stuff drops, and like, they kind of be like, who cares, right? I don't know. So I think my opinion is exactly that as well. I think everyone sort of becomes stock traders.
Yeah.
In the future, in the sense of longer term trading, longer term holds. And
it's actually like, if the lower time frames are arbitraged by algos, it's actually beneficial for us as retail traders as well, because we can make sure that at lower time frames, most of the time, the price we see is really the fair price. There is no spoofing on.
Yeah,
that's an interesting approach, actually, because I
think market everything becomes swing.
Yeah.
So we do know that. That I'm not an expert at this at all, but we know that there's different ideas to describe financial markets, and the one that has kind of stayed with the inside the academic world as the go-to explanation of market is the efficient market hypothesis, which basically says that markets are efficient. But we do know from technical analysis and trading that that's not the case. Markets are not efficient. We do see inefficiencies in the market, and that's what we exploit as traders. A lot of strategies out there are all about exploiting the inefficiencies in price action.
But come on, even if you analyze something like 1 hour euro-dollar charts for the past years, it's extremely hard to find an edge. So it's very efficient, no?
Old mate that pioneered the efficient market hypothesis. What was his name?
I can't remember.
He then later started a hedge fund.
FEMA, something.
Oh, you the guys in the 90s?
Yeah.
implying
Who
that
went
he could
bankrupt with a
outperform
hedge
the
fund?
market, which completely
Wasn't it
disregards what he. Right?
That was. I still remember that very well, actually.
Okay, I gotta.
I've lost it now, but yeah, he basically,
Didn't they win the Nobel Prize for inventing the Black and Scholes formula for option trading?
No, it wasn't. No, it wasn't those guys. It wasn't. It wasn't. It wasn't them. What's his name?
I'm gonna Google here. I think it's FEMA. Okay, so it's okay. No, not at all. It's Louis something and Paul Samuelson. No, Eugene Farmer. Eugene Farmer. That's the guy I'm referring to.
That was in the 90s, right?
1965.
Let me see.
Oh,
And
60.
Louis started the idea. It was first coined in the beginning of the 1900s.
No, I meant like there were those Nobel Prize winners who were consultants for hedge funds in the
for
90s.
long-term capital management?
Yeah, that one, exactly. That one went
LCCM,
bankrupt. That was like a huge thing for banks in the 1990s, I remember.
But it worked so long as you stayed in the parameters, then you're good. But dip out.
The idea with the efficient market hypothesis is that I basically the whole notion that everything is reflected in price, right? Like everything is or the price. I guess it's that price reflects all available information, and it price corrects immediately to all new available information.
Yeah, that's the foundation of technical analysis, basically, no?
Yeah. The thing with that I've always had a problem that on the surface is that yes, there's going to be someone that has the information that acts quickly, but the problem is the market is not just information; it's the how much you're willing to put towards that.
Yeah.
So you could have perfect information, but if you're being a bit soft and you don't go full out, you're not going to be pricing it perfectly to. If it truly is, you have 100% that this is correct, and you put in like 20% of your book as just an arbitrary example, you're clearly not pricing it efficiently to your actual knowledge of confidence belief. And then there's a mismatch between what you think is 100% versus your confidence belief on the knowledge that you have as just like a fallible human being. And then also just the depth of your pocketbook versus the broader market as well. Right?
Exactly. Yeah.
So there's like clearly going to be a mismatch. Like it's impossible.
Personal effectiveness, basically, you know.
Yeah.
So the efficient market hypothesis actually, if I'm not completely mistaken, it states that you can't beat the market. So basically, it says that technical analysis is pointless. Fundamental analysis is pointless because you can't beat the market because the markets are completely efficient and there is no way of if information that is out there is always going to be reflected in price, and it's impossible to beat the market. So the efficient market process basically says that invest in S&P 500, anything else is never going to be profitable. Now there are of course proof that the efficient market hypothesis is not true, because short-term trading, we can have day traders. There are examples of long-term profitable day traders, right? And then they are proof that the efficient market hypothesis is not true. At least that's the theoretical because if efficient market hypothesis is true, then it kind of negates the idea of us using technical analysis to make money. Because technical analysis, we are looking at gaps in the market where the price of an asset is not where it should be, you know?
Like you could say efficient market. I feel like it's pretty clear when you can see the market is not being efficient, right? So if you're saying there is a efficient market hypothesis and it needs to deviate back to efficiency, or you assume that any given price ever at any time is 100% efficient, which I don't know how logically or rationally you could actually come to that conclusion. You know,
and then why?
Say
like we look
panic.
We can look at your
like, is that price rational? What do you mean? What?
Yeah, so if we look at Euro GBP here, if
getting
price
very very philosophically here.
Philosophical, very esoteric. Yeah. I will say.
But there are a lot of economic there's a lot of research, like scientific research on this, and there are alternatives to the efficient market hypothesis, and that would be the adaptive market hypothesis and the fractal market hypothesis. And the fractal market hypothesis, I believe, is because the markets are built up on with a lot of different people and a lot of different investors with different time horizons and different ideas of value. And then you have the adaptive market hypothesis. Either it's the adaptive or fractal, but one of them is, the idea that we have different time frame traders basically making up different time horizons and different values of the market, and the other is the fact that markets move between being efficient and inefficient. I think the theory that makes most sense to me is the theory that says that markets are sometimes efficient and sometimes inefficient, and we as traders, we want to find the times when our trading strategies are finding an edge in the inefficiency cycles. So you can look at, for example, a trend following a strategy performs well when the market is inefficient, when it's trending in one direction and it's like a sine wave pattern and the markets are fluctuating around the mean. But if you have a very narrow, low volatility range, one could say that that is a fairly efficient market because it's trading within a narrow range. But then again, on the lower time frames, you can also trade that efficient market with the idea of a mean reversion strategy. Why is that possible? Why would it be possible to trade within a range if price is complete? Like, for example, Euro GBP here. Why did price spike up here? Is this an efficient market where it's like goes from here to up here in a matter of a week and then back down here? Like, did the European economy die here? It's like, is it efficient, or is it driven by the fact that people are trying to look for that at equilibrium in price, but eventually what you'll end up with is just the mean price? So the argument for me would be that the mean price is the true price, and then people are trying to look for that mean price, and that creates the fluctuation. So is the market efficient?
Yes,
Uh,
over a long time frame, I would say,
yes.
but it's like efficiently inefficient, right? Because the
Yeah.
thing is, you have different market participants with different interests. Some are more conservative, some are more risky, some have a longer time frame, some have a very short time frame. People live in different jurisdictions. If you've got a certain stock and you're liquidating, it's not necessarily always because you believe the stock is doing bad. You might have to pay taxes, right?
Yeah.
That's not efficient to the market pricing of the stock and your belief in
Yeah.
it necessarily. Like there's other portions that come in, and then you've got this massive wild mix. So the only further argument that I can see is like some kind of law of large numbers thing that ultimately, smooths out that across everyone and aggregates it. But the deviation between all these things is still quite large. And then you have, retail, regular participants, you've got institutions, you've got hedge funds, you've got everyone with all sorts of different, ideologies or motives.
I, I
Yeah.
think in academics, this is called bounded efficiency, if I'm not completely wrong. So you have
Yeah.
the markets are efficient enough to punish, let's call it laziness, but
Yeah.
they are messy enough to reward insight. So long
Yeah.
term, for
Yeah,
example,
exactly. Yeah.
a bit like when you look at a swarm of bees. When you look at it very up close, it's like very chaotic, but from a distance, it looks like things are form certain patterns.
Yeah.
This is probably
Yeah.
also, why people flock so much into the markets, because this is like feels always like a riddle that you're close to solving, but you never can completely
But
solve it.
it's like, this little carrot on the stick that's
Yeah,
just,
exactly,
you're like,
exactly.
And I
keep
think
missing it.
also
I'm the donkey following it.
Yeah.
I think it's interesting to think in these terms as well, because we have a type of culture right now in trading, especially in the trading education space, where, I mean, I'm sure all of you have been on social media, and there's these ads or shorts or reels or whatever pop up, and it's amazing, right? You have guys coming up and it's like, oh, this system's 80% win rate system, and it's called the super double burger whatever system, and you
Double
trade it
whopper.
exactly like this, and it's based on this candle, and it's repeatable. It always happened at this very time, this time every day, and 80% win rate guaranteed, right? And 10R or whatever. And you watch that and you're like, this guy has clearly not understood the functions of the market and the way the markets move, right? So getting a better understanding of these theories and the idea of mean reverting and trend following, and the idea that the volatility expansion and everything, and these different theories for how the markets operate will give you a much better understanding of why it's all about probabilities. So when someone says, "Oh, I have this bulletproof system here," bulletproof system, it's based on it's based on this fundamental idea here, and it has guaranteed this win rate and everything. You kind of understand quickly that it's too direct and it's too rigid, and the idea of you having a 80% win rate if you just follow whatever that guy is doing is there's so much more around it when it comes to probabilities. And the more you understand the statistics and the probabilities behind trading, the more you understand that it's very difficult, and you just because you're profitable this month does not mean you're profitable next month. Like your edge in the market might not be there tomorrow, it might not be there next week. The everything is just so fluid, right? And to be a trader is basically just being able to risk money on ideas that might just disappear and become unprofitable tomorrow.
Yeah. I think you have a super fan, LG.
Yeah, maybe.
Guys, I need to. I
Um,
got some stuff I need to finish up here, so I'll need to jump off before Will and Richard comes on here. I'll be listening in
Yeah.
the background as always.
Do that.
All good, mate. All good.
Take care, man.
All right, take
See you
care.
soon,
See you
Jonathan. Ciao, man. I did have a couple things. Henry asked some questions ages ago, which I did start, but we were
Yeah,
sort
come
of,
on.
yeah,
If you allow me just, to close up this conversation
yeah,
right
sure,
now,
sure.
because I think this is a very fitting comment here from Black Mamba Trader. Years ago, when there weren't so many machines, you could catch and close clear arbitrage. 100% success nowadays with the machines, especially high frequency trading. That's impossible. Exactly that. I remember when I started, my boss back then, he was arbitraging gold between New York and Frankfurt. And he could do so because there were no fancy computer systems yet, because he had a ticker line directly to the New York Stock Exchange, which really would by paper ticker print out how the price in New York was just now, so he could get on the telephone and arbitrage, buy in New York, sell in Frankfurt. That was still possible back then. We actually, back then in the stock market department at the bank we were working, we were using Excel sheets. We had live streams of stock prices for German stocks from different local German exchanges, and we would, with a mouse click, arbitrage them against each other. It's not possible nowadays anymore, obviously, but this, I think, is a good way to kind of wrap it up, to show like how effectiveness in the market has developed. It was always at least some sort effective back then. Like clearing up that or going into a more effective state again took a little bit longer, so it was still possible for us humans. It's not possible nowadays anymore.
Yeah, I think the most recent example is obviously like crypto, right? Because part of when I started trading was early Bitcoin days, and I did put a good bit of money in there. I never thought Bitcoin would have blown up to where it did.
Yeah, who thought that?
So it turned out very nicely.
Yeah.
But at the time as well, because I was doing that, and obviously the sort of physics, maths, whatever stuff, and interested in things like technical kind of weird stuff like arbitraging prices and that kind of stuff, right? And so yeah, you used to have the between exchanges back in the day as well, and now that's been obviously run down. right? So you can't do that anymore. But that would be the most recent example outside of the sort of 2000s, I guess, when there was still a
And
bit of that.
surprisingly, when I talked about earlier, when I did this, when I tried to design this kind of order book microstructure system, where I failed at, the asset that was showing more potential there was not Bitcoin, but like altcoins, which have lower liquidity, which tend to be, of course, more ineffective. Like in Bitcoin, there was no edge whatever to find. So it seems like Bitcoin is already, like, at least at lower time frames, is super effective market.
Yeah, there's enough people using it, transacting it. It's that well known, that kind of stuff. Yeah. It's almost like you go to like Apple or something versus like a penny stock, right?
Yeah, exactly.
You can still find inefficiencies in that like abstract, portion of the market, but in the top portion, you're not going to.
Exactly. Yeah.
I will say as well though, did you see Berkshire investing in Google?
They do now.
Yeah,
they probably do because they bet on
what did you think
Google
about
winning the AI race, no?
Yeah, but that's what I mean. But this is very much at the top. I mean, Google's up 70% this year, which is insane.
Has Warren Buffett handed over already the decision making?
Yeah, I think he has. He's still mixed in it, but I think he has actually. I think it was like a month and a half or so ago. I could be wrong. Don't quote me on that, but I think he has handed it over, and now he's the same way that Ray Dalio was in that like advisory period where formally you've handed it over, but also formally you're still the decision maker whilst the new entrant sort of gets the full grasp of things, right? So hence the same thing that we saw with Bridgewater. There was a bit of a teething process before that fully. Now they've actually done pretty well this year, but when that first handover went on, it was a bit rough. And so I think as well, Warren actually saw that because he did comment. I saw one thing where he commented on that and wanted to make sure he had enough time to properly move that over. So, but yeah, as far as the trade, like I know he did the Apple thing very well and actually went pretty good on that. But I gotta say, the Google thing now seems pretty. That seems risky.
Yeah.
From Warren, that seems risky.
But I
unless you've got some kind of hedge trade where you're like long Google, short Nvidia in some weird.
I mean, we are also.
I don't know how else would you structure.
We're not talking about investing like 30% of the portfolio into Google shares. Probably, I don't know how high the percentage is there right now. We're looking at the whole assets under management. I think actually it's not. It's a pretty smart bet because if you
I think
look,
you got to.
If you look like at the difference, how has OpenAI progressed in terms of AI, in terms of capabilities of ChatGPT, Google, who were like behind the curve in the beginning, they were surprised by OpenAI, and they had this like red alert. Everything at Google has to focus on AI now, and the first versions of Gemini were like shit. Really, sorry, I'm not allowed to say that on YouTube. They were like .t and but they have been catching up. So the latest version of Gemini is supposed to be better actually than ChatGPT 5 with all the money that and resources that Google has under the belt, which are of course much more than OpenAI has, which led to OpenAI now sounding the red alert. Hey, we have to catch up to Google again. We have to do something. I think maybe the bet stems from that eventually Google is going to win the AI race we are seeing.
Yeah, well, I mean, okay, I thought it was okay. Yeah, I must have read that wrong because it's 4.3 billion. I thought it was 43 billion.
Okay, I mean that's nothing. 4.3
cash. Yeah. 4.3 is nothing. 43 would be sizable.
That would be sizable.
but yeah, so third quarter. So yeah, this was even before we had the recent thing just now of the Google using their old 10-year-old chips. So he actually front ran that because this was Q3 apparently when
this
they
is what
actually
connections do, no? When you
yeah. I'm sure there was we think we can do this. You might just want to take a right.
But it's a good example of a bet, where you risk a little money, like compared to all the money that Berkshire Hathaway has, of course, and your edge to the upside can be very quickly like 10x or something like this. So
I must
probably
say,
a good risk-reward ratio they have there. And the risk is, of course, not losing all money. I mean, Google's not going to go bankrupt, but maybe, losing like 30 or 40% or whatever.
At most,
really.
Right? Yeah. And then it will probably recover. So if you want to sit on it, you can just be like, okay, cool.
But that's the things always, that sometimes makes us humans also really bad in making investment decisions, because having the fantasy of something that has grown, if you look at the stock price of Google, by such a margin in the 10 years, to do that again in the 10 years is like very difficult to imagine. That's why we humans, when we talk about investment, about trading, at least as beginners, we're always prone to try to catch the high, and fade the high, so to say. And so do, like, what is that called? The opposite of trending strategies are where you mean reversion strategies, so to say. No, it's not.
Mean reversion. Exactly. I remember when we were looking at Apple at like 800 billion, and we're potentially going towards $1 trillion. And this was, I don't know, when was this now? Like 2017 or something? Must have been. It was before COVID, right? And they were outpacing everyone, like, massively. But then we went to COVID. You got to $1 trillion, and then we're just straight to 4 trillion out of nowhere. And you're like, $1 trillion, maybe that's getting a bit too crazy. Like, we might see some selling. We'll see a downdraft in the market. Obviously, if we didn't have COVID, to be honest, I think we might have had, like, we were definitely setting up in 2019 for a bit of a downtick. But yeah, it's crazy how you could go from there to
it's insane. I
kind
remember
of expansion just out of nowhere, and it was like that.
I used to own Google shares, and in like fourth quarter of 2015, I bought them when I was living in Singapore, around $30 or $25, and then we decided we're going to move back to like $30 or $35, I think it was then. So if I held on to this, quite extensively already about gold, but we can have a look again, of course, at it. And I'm not approaching this now from an intraday perspective, of course. But I said before, and I'm more than happy to repeat myself here, gold is... We're losing you both. All right, are we back, or do we have like a general problem?
I was about to say, are we back? Was that just me, or was that everyone?
Dirk is back, it says now.
Okay.
Seems like there was a general issue more, yeah?
Yeah, I think that was everyone.
Let's ask again. Can you guys see us both and hear us both now again?
Yeah. Henry's...
Ooh. Now LJ is back, and now what is going on here? All good again, but now LJ is like stuck again. I don't know. Can you guys hear and see me now? Let me put it like this. I know there's always a bit delay. Good. Let me quickly. Okay, so it seems like at least you guys can see me. So there seems to be a little bit an issue from our broadcasting software, and maybe LJ also has a problem with the internet connection. Good. So I'm just going to continue here with gold then, and then we let LJ rejoin whenever the connection is better there again. So like I said earlier, guys, I'm not much of a scalper when it comes to gold. I have my short-term trading system, but this still needs a bit of adjustment before I want to put it live here, really. Same system I'm trading on the NASDAQ, but that still needs some time. So I don't want to talk so much about trading gold on like very low time frames, like a minute chart or something, but long-term gold. And I mean, this is really, to me, like an example of how easy it can sometimes be. Easy in rackets, of course, it sometimes can be, is to work with moving average, because in trends, moving averages are your friends. And for gold, really, actually for any trending market, heavily trending market, so same for stocks, for Bitcoin, the strategy of using a 8 weeks moving average on a daily chart. So you can see this is 8 weeks, time frame 1 week, and the so-called bull market support bands, which you can find if you type this in to indicators here, trading view, are really the perfect combination. Because what happens usually is, when in a trending market the price returns to the 8 weeks moving average, it can be an aggressive buyer, and we've seen plenty of examples for this with gold lately. So it really retraced very, very, very well, always when it was touching the 8 weeks moving average. So whenever that happened and you would have bought, that would have been a winning trade already. And with you can use a very narrow stop loss here. And what is special about the situation we are now seeing in gold is that we've seen actually already a breakout from a zone of compression, right? We've seen a zone of my screen is gone now. Oh, come on, what is going on? So let me quickly ask my colleagues if can hear and see me still. Okay, I'm being said can hear me. Bear with me a little while here, guys, please. Okay, it says now I'm back properly. I hope that's true. So yeah, where was I? So we have a zone of compression, and this is something that happens quite frequently in gold. So last time we saw that was starting in April. You know, remember that very well. We had this long sideways action in gold when nothing was really much happening, where price was getting lower and lower when it comes to volatility, until we saw this breakout to the upside. Now, it's always difficult, of course, to define when exactly is this breakout happening. And if you go back on the chart, by the way, you can find many more areas like this. Welcome back, LJ. There he is
Yes,
again.
we're here.
Yeah. But I think it's issues with EV Max right now, LJ. So there seems to be a little bit of a connection problem to the server. EV Max is the software we are using for streaming here. So for gold, it like, if I had to decide now, what should I do on gold? For me, it looks like a more floating compression zone we are seeing right now. So where if we treat this as a triangle, we see like the 8 weeks moving average acting as the zone of support. We had a zone, and there he's gone again. Oh my God. Oh, this is crazy. So we had down here at the 8 weeks moving average, the zone of support. We had the two lower highs functioning as the zone of resistance, and we kind of broke out from this. So following the logic here, what I would do is, because we have a nice area of confluence now between charts because it's like also here in the software on and off, and I cannot do anything anymore now. Really, really a bit confusing. I'm afraid I'm totally gone. Actually, as a matter of fact, I can have a quick look at the stream myself. But it seems like I'm still on there. Yeah, I just looked at myself. I'm still on. For whatever reason, I cannot remove the box beneath here. So again, going on with gold. So what I want to do here right now is we have a nice zone of confluence here where the trend line of the two lower highs and the 8 weeks moving average are connecting. So you see this one here. So should we this week see a price move down to that would be the area somewhere around 4,115, 4,120. I think if you want to do a more swing trade on this, this could be a good area to go online. LJ, again, welcome back.
Oh wait, am I back? I
You
am
are back.
Okay,
Yeah,
cool.
you are back.
Oh,
You are
sweet.
A bit crazy, guys.
It keeps going reconnecting, disconnecting, reconnecting.
I also like EV Max, also like
I
acting
was like,
up.
oh, I'm here.
I it's like, okay, am I still online or am I talking to myself? And he's gone again. This is crazy, guys. Absolutely crazy. But we are left with a nice smiling picture of LJ. Then at least let me quickly go over again to the live stream. Yeah, okay. At least I'm online still. Yeah, who knows? Maybe Cloudflare is offline again somewhere in this world, or somebody cut an internet line between the continents. That we are experiencing issues like this. Cloudflare being attacked or being offline has been something that has been happening quite a bit right now. While we are waiting for the technical issues to resolve themselves, anything you guys want me to look at? Or are you, like me, already so confused by all the weird things going on the technical side today with our live stream? And it's weird because I'm not seeing messages also anymore now. Really weird.
Back again. This is on like repeat. Okay, Henry, I'm gonna try get your question in.
It's like
3
Groundhog
seconds.
Day, really.
Yeah, Henry, I have not yet watched Idiocracy. Second of all, your original question: could Aussie dollar go to 69 cents? Hang on, I've got another video playing. I gotta mute that. That's annoying. Okay. If they actually started hiking rates, which I don't think they're going to do at all, I think that would absolutely ruin the housing sector, ruin the economy. Everyone's out of pocket spending because you pump that up. This is hundreds, thousands of dollars a month out of regular people's pockets. So I don't think it will happen. If it did, we would go well beyond 69. I think we'd be up towards 75 cents on the Aussie dollar if for some reason RBA decide to start increasing rates. That would be at least. And the other portion of that is that all of the superannuation funds are unhedged the Aussie dollar. So since the ASX is too small and they have to invest majoritively like overseas, and the majority of that is into the US, into the S&P, into the NASDAQ, that kind of stuff, and you've got the US dollar coming down, potentially going forward. If you had that scenario, Aussie dollar way up, they're completely unhedged Aussie dollar. So if every superannuation fund had to hedge in that kind of scenario, which I have looked at, it would drive the currency back above 85 to 87 cents, purely just on flows and like forced demand of flows, because this is like a regulatory type situation. not like a speculative type deal. So, yeah,
85 to 80.
but yeah, they're not gonna hike. Not gonna hike.
That's the last time we saw 85 cents was in February 2015.
Yeah,
Crazy. I just seen we had been all the way up
look,
to.
I remember the 98 cent days back when we were at parity with the dollar.
Look at this. In the 70s, we were at 148.
Yeah.
You have a volatile currency.
No, it was great, dude. Okay, after GFC 2013, okay, so I started shorting at 98 cents when I first started trading back then. 98, 97 cents, and I rode that thing the whole way down. Yeah, dude. I cleaned up that and shorting gold back then at about 1800 to the 1700s, all the way down to 1250 odd.
Nice.
Which the decision for that was basically the cost of production for gold at the time back then. Yeah. So yes, I did clean up on that, and also by chance, after I made money from trading these guys, then invested in Bitcoin, and then that took off. And so yes, that's when I was like, I'm not going back to university.
I'm hooked now. I'm a smart trader.
I've cleaned up. I mean,
Sorry, mate. Can you excuse me for like 2 minutes? I have to.
Yeah, that's a good. Yeah.
Do something.
So, right, here we are. All right. As long as we don't disconnect again. Don't know what's going on, but all right. So gold. I think right here, mapped this out last Friday, I think, on the Discord. We've kind of got high lows coming through here, but then lower highs coming through. So very much consolidation. We had that slight breakout. We pulled right back into that. We're very indecisive right now on gold, to be honest. So you've got two treks right here. This is if I zoomed way out, this is basically the long-term trend line that goes beyond that to the all-time highs. Right, so up to 43, what was that, 43.85 or so that we picked up. So from here, either you get the sustained move higher, or we get the downdraft. Now, this is obviously going to come down to the Fed. We're only hours away now, frankly. I pulled my euro piece up there. So gold going into next year, I think we definitely have upside tilt. Going to the end of the year, I think it's going to be somewhat consolidation. I don't think we would see all-time highs. Nothing from the Fed, from Jerome Powell or anything is going to signal anything new, quite frankly. So you've probably got this broad base through here at this upper section that we're likely to trade in. Right, so somewhere between the 4265 and about 4130 or so going into New Year. So that would be the play. Now, if we go over to Aussie dollar, you guys that were on the Discord call last Friday, we've seen this. This ended up being pretty good. That was a trade that we took through there. Ended up jumping out through here, just ahead of the soft support through here, like near term, low time frame support. I would have hoped that we might have actually kicked on a bit further for the Aussie, but we didn't. Closed the week out, jumped up a bit higher. Today, we've actually had a bit of a downdraft. So, I think Aussie dollar overall, my end of year target was about 67. So this is still on form for that. So on any kind of dip, finding a relative base, I would be looking for longs. Same deal with euro dollar. If we zoom out a bit, I think euro dollar through here, with what we've got with the Fed and the rest of this year's outcome, I'm still looking for, as you guys can see, this was my piece that I outlined before, end of year expectation, somewhere about that 117. Right, so same deal. For euro dollar, Aussie dollar a bit higher to about 67. We're very close to that. Euro dollar needs to come a bit further, and then hence dollar yen is still on that that downdraft. We're now coming up to that resistance here. I think we end up somewhere around 152 coming to the end of the year. That's my broad estimate. So, welcome back, Dirk.
Thank you. Thank you.
Jump your chart. I gotta jump up just real quick as well. So,
Yeah, sure.
yeah, hang on. So yeah, or dollar to 69 on the monthly. Yeah, dude. So Henry, basically, I think we'll get to 69 just naturally, regardless. I don't think it'll take the rate cut though. Sorry, rate hike. I think it'll just be the rate cuts from the US, and part of the suppression that we've had on the Aussie dollar, it should be way higher. So relative value would be somewhere closer to 71, 72 at the very least, right? Given the expansion for, especially with some of the rare earth commodity deals, that kind of stuff, our positioning between the US, China, both of them jostling together against each other, but at the same time voicing that and trying to do more deals and take advantage of Australia and our position in between both, right? Now, that plus rates, plus our economy, all that kind of stuff, we should definitely be much higher. But you get that window to China as the risk-on, risk-off proxy trade, because trying to short China or even long China, for that matter, is very hard.
Yeah.
Right, because they don't have a broad open economy, right? So often Aussie dollar, because it's not just going long or short it's going long or short that expression with liquidity as well. So the broadest, in and out type trading instrument is going to be the Aussie dollar.
Yeah.
So through the whole year, we've been suppressed.
Kind of a proxy trade if you don't want the direct exposure to China and the yuan or the stocks. Yeah, I agree.
Yeah. So that's the thing that's kept us down, and the same way that how we've been pretty much in line with even New Zealand dollar. And New Zealand has gotten hammered in the past while. They've had housing problems, they've had all this and that, and arguably, technically, Aussie dollar and New Zealand dollar have kind of kept up because of those excess inflows. But we're now even seeing in the Aussie New Zealand dollar cross pair that we're now breaking out the Aussie dollar schemes that wants to take an absolute rip, which it hasn't done for a number of years, right? So, and I think that's one of Jonatan's prime trades.
It is.
Next month.
Yeah. All right, we have two gentlemen in the background who are ready, eager to join. William and Richard, welcome, guys.
All right, give me a sec. I'll be back, and then I'll say hi, and then I'll say bye, and then I'll be somewhere.
Hello.
How are you
doing, guys? What's good?
Not too bad. Not bad. How is it with you guys?
Yeah, good, man. Not too bad. In fact, I'm actually going to change over.
Do you have your mic, actually, your correct mic on, William?
Yeah, you
Sounds
sound
a bit
very
echoey.
Yeah.
Right, okay.
Sounds like the camera mic, maybe.
It is
because that's the mistake I usually do. So
yeah, it is the camera mic.
And here I thought Will was a professional streamer.
Not really. We are.
Is that better?
Yes.
Yeah, that sounds much better. Awesome.
Yeah.
Since you also have one of those professional popping filters on your microphone.
Dude, why have I got... Hang on.
No. Cannot hear you.
Okay, that's fine. I'm on the right mic then. I had like 6 options for mics, and I was like, why do I have so many microphones? I've only got one.
Yeah, I feel you. Yeah. I'm always confused also when I get to the selection menu. How are you guys doing? Welcome to our little choppy stream here today with a bit of technical difficulties where just now I think we now should be better already again, as it seems.
It does feel a little bit better, yeah.
It feels a little bit better. You guys already in any positions this morning, or have you been flat?
I took a GU sell this morning during Will and myself's stream, and then I tried one on EU as well, and then EU just decided to go. flat.
Interesting here at GU, I think also here at the, well, in this case, it's like the sideways support bands, if you want to put it like this, but interesting to take a short there, in my opinion. How's that looking on
Well,
euro dollar?
I do trade very low time frames, so
I mean, look at my failed analysis here from last week. Where I said, oh, it's going south. It's going south. Better delete that. Later, I'm going to be held accountable for that. You trade on the very low time frames. What do you define as low time frames?
5 minute generally is my entry point.
Cool.
And it's usually I jump between the 5 and the 15 to see which one of the two I like the most. GU on the 5 minute didn't look bad for an attempt to push lower, so I took a short.
Nice.
Like I said, I trade what I see, not what I want to see.
Yeah, exactly that. That's a good system. Right, before we start, guys, let me know. So I've had a fiddle about new camera-ish, well, sort of a new camera. So I've connected that now. Let me know if you can see me okay. And again, I think we've sorted the microphone issue out, so hopefully you can hear me all right.
Excellent.
Awesome. Okay.
Prime 4K quality and sound.
Fantastic.
Coming from
I do apologize. I can't help about what you're seeing. Unfortunately, you're just
You were
seeing
born that way.
It's okay. People are used to me for the last hours.
Yeah, it's a better camera, so unfortunately, you've got to see me a little bit better now.
I feel like LJ needs to get glasses or something.
LJ just got like. You're right, LJ.
You're muted, man.
You're muted, Mai.
Wow, that might explain things.
Yep.
I got left out on the cold in that one.
You squinting your
Joke.
eyes or that you're muted.
It's like the thing where you're driving around, and in order for you to see which way you need to turn, you switch the volume of the music down.
Really, it's like this.
Mate, I do the exact same.
Almost arriving at your destination. So you have to turn down the volume so you can find your actual destination.
Yeah.
Isn't that crazy?
Because apparently,
Yeah.
the volume the lack of volume helps you see.
Yes, of course. There's a high correlation between that, I'm sure.
I remember.
All I'm saying.
Yeah, I remember when I was driving through France, we were getting to the town that we were going to, like the next destination, the checkpoint. And we had the music on, CC was chatting to me, and then it was like 2 minutes out. I was like, Isht! There must be silence.
Need to find out where we're going.
I'm trying to see.
You could have heard a pin drop from a mile away.
Dude, not
I was
with
trying to find where I was going.
comp. There's no way. All you would have heard was that V8 engine of yours just rumbling.
That's all you heard was like.
Doesn't M4 doesn't have a 6?
Yes,
V6. Yeah, it's
I was
6.
throwing the V8 out there for the.
I'll tell you what, though, I was behind my brother, and the roof was
inline
off.
6, right?
Yeah, V6 twin turbo. Yeah.
V8 is like the 2004 Formula One cars, no?
Yeah, I tell you,
No, the Prime M3.
Yeah.
So the E92 has a 8.
Yeah, I did look at an M3, but I couldn't find one. But do you know how hard it is to find a nice M3? Impossible.
Mate, they're rising. They're rising.
I know. I tried to find one. Couldn't find one for love nor money. I was I loved the M4, but I was like, I wonder if I can get. I wanted a V8, and I looked at the RS5.
Ooh. Yes.
Yeah, that was really nice. That was V8.
Yes, dude. Side part. I think the RS5, the A5, the S5, that 5 model for Audi is one of the most beautiful
Audi
cars
model they've done
ever produced ever. It's just
100%. And I looked at one in like a baby blue, and it was so nice. It was so nice. But then I don't know. Again, just BMW, man. It took my heart.
Back from the days where German engineering still counted for something.
Yeah.
Dude,
Well,
it counts for something.
It definitely still does. It definitely still does. But
100%.
All car manufacturers these days have dipped because, and it's not their fault necessarily. It's regulations that kind of rubbish. They're all very heavy. Different, crash crumple zones, all that kind of stuff. The same way you can't have like pop-up headlights anymore because they're banned.
Yeah.
Because apparently
I
they
know.
hurt
Do
pedestrians.
you remember like the old
It's like-
Mazdas?
The Mazda,
Yeah,
Miata RX-5, and
used to like wink at each other.
yeah, so good.
I love the Miata MX-5.
Yeah. Dude,
Yes,
I took an MX-5 around the Black Mountains, and it's just so much fun.
but it's insanely difficult, no? Because all the grip comes from the tires in that car, so you don't have any downforce.
definitely.
So you have to be really careful on the corners.
It's insanely light and it's insanely small.
Yeah,
So it's just-
Yeah. And I think that's the thing as well, because I used to be very much more originally like Audi, Mercedes, per se, right? And I had my cousin worked at Audi, and then when I was younger, I used to hang around the dealership, all that kind of stuff, look at everything. This was just after Audi bought Lamborghini and like all that kind of stuff as well. But I was still very much sort of preference or bias to that platform. But then I must say, once I did get a Beamer and drove Beamer, I was like, okay,
Yeah, it's a proper driving man's car. You know?
I understand. Yeah, it's
literally. Like everyone
It's
says to me, they're like, "Oh, Will, you should have got an RS5. You should have got an RS5." And I was like, "Yeah, I looked at the RS5. It was nice, but dude, come on."
There's some of the raw refinement that it's, and that's the thing. That sounds contradictory, but it's raw and refined in this really weird way, where like Audi's really good, but it takes the rawness out of it, and it's just too refined.
Yeah,
You actually lose some kind of like inputs, like through the steering wheel, that kind of stuff.
Dude, it's the same with Mercedes, man. Like I looked at a C45 AMG.
Okay, sorry to interrupt. I really have to make a move.
You gotta go, Dirk. Yeah, sorry, mate.
No, all good.
Sorry,
all good. I
Wait, Dirk,
would like to
Dirk.
stay in the discussion, but because I'm a bit of a
Dirk, final question then.
Yeah.
Being German, okay, which one do you pick? Audi, Mercedes, or BMW?
BMW.
Yeah.
Okay.
I like the M2, I like the M3, and like if I think about, I choose a car which is fun, when you drive somewhere in the mountains or you go to Nuremberg or something like this, definitely. If the budget is free, and I have unlimited money left, and I only want to race with it, it probably would be a Porsche 911 Evo, 919 Evo. So I finally can make the Nürburgring in like 7.5 minutes. Also.
Yeah, that's fair.
Yeah, Porsche. I have a mate who works for Porsche now on the Nürburgring.
Oh wow, that's amazing. They are really hard to drive, though. Not that one. That one, of course, is like a hypercar race specific. We are heading for a record there. But if you like a 911, an old one or something, really, really hard to drive.
You always see on his stories. So like he used to be my mechanic, and I used to take invite. He rebuilt my. So I've had BMWs my entire life. The only car I've had is a BMW, apart from I had a Ford Fiesta ST, which I blew the engine on. I'm pretty sure BMW stands for bisexual men's vehicle.
Comment of the day. Why is it that you always get comments like this, Will? Whenever
Thank you.
That
was great.
Yeah, but it's from LJ's friend. So
yeah, technically it was at me, to be honest.
Coming from somebody whose name is
come on,
69.
Yeah, but Camille was saying I love Audi, which I was starting with the A5, the RS5, that kind of platform, all that kind of stuff. And then I mentioned BMW, and then that's when he dropped this. So technically it was a attack against me.
Anyway, guys, I really gotta go now.
Go away.
Everybody.
Go, shoot.
Run. Again latest next week. Bye-bye.
All right, bye, Dirk.
Dirk, see you later.
Have a good day, Dirk.
Cheers, mate.
See you later, bro.
I will say, just to round off this, dude, RS7.
Yeah, 100%. The RS7 is
Camille, I have to agree with you. That is definitely one of the greatest cars ever.
100%.
Sure. Dude,
I'm not into my estate cars, but I want an RS7 just to have an estate. If it was an estate, it'd have to be an RS7.
And that's the thing. It's like what you guys call an estate in the UK, but it's like estate supercar. Like it's on
literally
absolute steroids. There is nothing you can't do with this car. It has the sound, it has the looks, it has the utility, has the driving capability, even around twisty
You
tight
can even
sort of
have it
things.
as a family car if you guys are into that. Like, if you're like, oh, I want to be sensible with a family car. Like, Audi
Yeah.
just got creative. Audi were like, you know what? There's someone out there who's a petrol head, and he's gonna have kids, or she's gonna have kids, and they're not gonna want to be boring, and they're not gonna want a BMW estate because, guys, look, I love BMW, but the estates are boring. They're not gonna want a BMW estate. It's just boring.
The old ones are cool. They
Yeah,
had
the
like
old ones,
quirky
the old
designs,
ones are cool,
but
but
the new ones are like,
they're a bit crap, man.
Yeah.
So Audi just thought, let's get a petrol head and a family man, or family girl or guy. You know, women can be petrol heads too. Let's be inclusive in this. Let's put them together and let's put them in a room and say, right, you are not allowed out until we've got an absolute love child between a family car and a petrol head's wet dream. And that then was the RS7. The RS7 was born. And in all fairness, like I saw the Nardo Grey one. A friend of mine bought a Nardo Grey RS7. And dude, oh my God, I fell in love. I was like, I want this car. Like, I really want this car. And in all fairness, Audi really have pulled out of the bag. Same goes with the RSQ8. The RSQ8.
Yeah, they're really good. Yeah.
Wow. Like, they pulled the hat out, or they pulled the hat out of the bag, or they I don't know, they pulled their finger out and created an ungodly car. It is an awesome car, but for a budget, or not a budget car, because again, the M4 is not a budget car. But
I was about to say, so it's that thing we've talked about here before, which Cam will know. Like, even you want to get like so for one, we have the massive luxury car tax that we still have because they were trying to support, Australian automotive industry, which all the companies have now failed and they're gone. But we still have this luxury car tax. So if you want to buy a Porsche GT3 or like literally anything like that, it's an extra 150 to 200k, depending on the spec, just for nothing.
Dude, that's
right?
wild.
And then so if you want to buy a used like RS7, and then because of this as well, the thing is it also decreases the total supply because people don't buy them because they're too ridiculously expensive, right? So it hence further increases the cost. So you buy one with like I don't know, there's not that many. There's probably only like 10 for sale, and then they've got like 150 to 200,000 Ks. Some a bit lower, it might be 100 because it's like a luxury vehicle. It's still going to be about 150 grand to buy a used one from 8 years ago now.
Dude, that's nuts.
Yeah. And so even with a M4, the cheapest you're getting is probably like 60k, right? 50 to 60k with like 200,000 kilometers on it.
Damn. And that's going to be an old one as well, isn't it? That's the old shape.
That's like the first gen, so 17, 16, whatever, when they first
Dude, that's nuts. We've had this conversation, man. We've discussed like because my M4
you can buy a first gen Audi R8 in the UK for like 27 grand or something, like 27,000 pounds, I should say.
So I looked at a V8 R8, and the reason I didn't want the V8 one was because the V10 Plus has come out, so it's like I kind of feel inferior to the V10. I'm like, why? If I'm gonna buy an R8, it's gonna be the best R8 possible. And then I looked at the V8, and then the reputation of the engine blowing and all, and I was like, never mind. But then I looked at the price, and I was like, dude, I can pick up a secondhand R8 for like 50k, and it was nice. Like, it was a smart R8.
Yeah. And you got, it's not the V10, but I think in the first gen R8, the weight difference makes a huge factor, right? Yeah. So you actually kind of want the R8 for that weight differential. There's actually a better driving experience. Now, in the later gen, obviously it's just V10, and then you go for the top tier, right? The face model. And as well with when they did the dual clutch, so the 2014 plus, I think it is. which is still the
I
first
knew
gen
they-
R8, but the facelift.
Yeah, I was going to say they
First gen.
facelifted it in like
Yeah.
mid.
So
22.
before they went to the V10 only. So that would be the way. But even that very first gen model,
It is nice.
yeah, 25 to 30K, like the cheapest
Yeah,
ones,
yeah. I
right?
think the cheapest one's about 30K.
Pounds.
Yeah,
Yeah,
GBP as
so-
well. Yeah, 30,000 GBP.
Yeah, so that to Australian dollars is about 50K.
Yeah.
Right, it's pretty much 2x. The cheapest ones here are about 130 Australian.
Mate, I
So
may
you
start
still got
buying
2.5x on that.
I may
yeah,
start.
for the
Do you have any way you
cheapest
can
one.
store cars? Like, what's it? What, do you have like a storage or?
That you can store cars. Why?
Yeah. I may start buying because you're on the same side of the. You drive on the right hand side of the road, or like.
Yeah,
Right
no,
hand-
I know,
right hand
dude.
drive.
I sit there on Auto Trader in the UK looking at arbitrage stuff. Now,
Dude, surely.
the big thing is actually Aventadors. I will tell you. Okay, we can get back to trading in a second, but this is something. So, any of the Aventadors or that kind of stuff that you can end up getting about 150, right? Pounds US. So sorry, pounds, not US, just pounds.
Yeah, GBP.
Yeah, GBP. So Australia would be like 300K. You got to pay import duties, that kind of stuff. It comes out to roughly just under 400. But they then sell here for 700. So the same way, I've also thought of like, I might as well just go over to the UK, live there, buy one of these cars,
Drive it home.
and I can, yeah, because if you own it for 12 months, you can take it home without the taxes as well. So the other cost I was talking about before is with the import duties and taxes. Now, if you've lived somewhere else for 12 months, you get no taxes and you bring it over. And you instantly make about $500,000 just for existing.
It's almost like it's like property. it's like property.
Yeah.
But for cars,
1
like,
year, and you get to buy a supercar and drive it around and just make $500,000 for no reason.
Imagine saying,
because you import
I'm
it
buying a
to
brand new car that's going to depreciate by probably like 30% the minute you drive it off, except I'm going to actually, invest by having a return of like 40-50%.
Yeah, well, I mean, it's typically going to be for certain cars that are desirable, so not just a random car, right? So
yeah, you're not going to buy a
V12s,
Ford Fiesta, no, I'd triple your money.
yeah, whether it's V12 Ferrari, Lamborghini, that kind of stuff. Some of the Astons, that kind of thing as well.
Yeah, dude.
But yeah, you can bring them over, and there's a massive differential.
Wait, when I sell the M4, when I come to sell it, I may give you a shout and be like, dude, like sell my M4 for me. I'll ship it over to you.
yeah. Well, the main thing is
crash it or anything.
what cars you're actually allowed to import. So it's either cars that weren't sold enough here, right? Or you've got that old like 25-year list. So for like old cars, right? So like first gen Gallardos, Ferrari 360, Murcielago, Lambo,
dude, I
Diablo, like a bunch of the other older ones you can import here just fine. But there's a bunch you can't.
Yeah,
so,
fair.
Yeah,
man. I passed a yellow Murcielago the other day, a couple of weeks back. Dude, what a nice car! What a nice car! I don't know why, but he's brave enough to drive it out. I thought.
No, my biggest thing, it was back when I was going to buy one, I got an offer for 245K. Right?
Wow.
This is back in 20.
Wait, was that your GBP then? 245K GBP.
Australian.
Oh, no way.
So GBP, that would be about 120. Right?
Yeah. Dude, that's crazy.
That was crazy. Yeah.
Wow.
And at the time, I would had to shuffle a couple of things. I thought I could probably wait another year because I had some other things going on. I was like, okay, I'll shuffle that around, and then I can buy it later.
You come to buy it, it's triple in price.
yeah, and that was the thing because then we went. There was a bunch of YouTuber type stuff of people talking about the Mercy, that kind of thing, and the rarity, all that kind of stuff with Ed Boley and all that kind of stuff. And then we went into COVID after that as well, and then all car prices in general went ballistic.
Oh yeah.
And so that same car, funnily enough, is actually for sale right now on Australian car sales
Go on, how
for
much?
745. Right?
Wow.
And
Ouch.
I got offered directly by the guy because I met him. He was just like, because this was my childhood car when my dad passed away, and I was playing at the Audi center, right, with my cousin. And this was just after Audi bought Lamborghini, and this was like the craziest car. And I've still got like a model thing, and I've got the old spec books to buy them, that kind of stuff, right, with the paint selection, all that kind of stuff. So definitely wanted it, but I was like, okay, I can probably wait another year, just to figure some other stuff out. Yeah, that's fine. And then it just took off. I was like,
dude, it was the same with the Mark IV Supra. Me and my dad looked at the Mark IV Supra, and it was like 30K.
yeah.
Mate, 30K we looked at buying that for years and years and years and years, years ago.
RX-7?
RS7, so yeah,
Skyline?
RS7 is another one. Yeah, the R34 Skyline. What happened to the R34 Skyline? I will never know. Again, that was a car you could have picked up for 30, 40 grand.
Yeah.
30, 40 grand, next minute, like 240 grand. You're like, it's just increased like 200K within like 2 years. Mate, it was because I looked at it and I was like, oh my god, Dad, wouldn't it be super cool if we bought this? And like my dad was like, oh yeah, that's actually quite a nice car. He likes his vintage cars. He doesn't like he's not into his JDM cars, but he does like his vintage cars. And mate, it was a Jap import as well. It was a proper import car, and I was like, I want it. I really want it. I thought the minute I can afford it, I'm gonna buy it. Dude, it was like 240K the minute I went to look at buying one. I was like,
yeah,
I don't want it that bad. Not for.
Yeah, dude. Yeah, a bunch of that is all like they're very good cars, but it's very much Fast and Furious. Like the same thing if you drive a Skyline, whereas R32, R33, R34, all that kind of stuff.
Yeah, dude, it would have been.
You have to do upgrades to make it fun.
Yeah,
right?
100%.
The regular one is pretty by the by because that's what it was made for. It's meant for a consumer car, and all of the JDM cars are that you do the upgrades and then it's crazy, right? So, I just will bring up Cam's. Dude, this 100% though with the Holden R8 Club Sport. Any of the Holdens, any of the Ford Falcons built here, it's kind of your cheap man's V8, right? But you can get it for probably at least a quarter or a fifth often of the cost of any other V8 Mercedes or German built thing out there. But it will put out the same to double horsepower, torque, everything. And yeah, just absolute, like it's there now. The thing with that is if you wanted to actually invest in something, funny enough, is to buy Holdens or Fords that people in America are now trying to import over there. Because they see a Ute and they're like, what the hell is this? Do you even know what a Ute is, right? No?
Utility vehicle.
Oh, okay.
Where you've got like the front,
it's like a truck.
I got you.
Yeah. But for them, they're like tripping out. Right? And they pay the same way that the Skylines went from like you buy one chopped for like 20 grand to 40 grand. And then that same Skyline all of a sudden is worth 400.
Oh, is LJ going? Or is it me? Hello? Oh, I'm going. Oh, it turns out it's my turn to join LJ on the quest of bad connection. Can you guys hear me okay? Okay, is it just me in now, or? Oh, okay, I'm good. Okay, that's fine. Oh, okay, fair. So MGen saying you're good, Will. The rest, though. Okay, fair enough. Oh, so it's not me. I thought maybe my Wi-Fi had gone. I was enjoying that conversation about cars. Okay. Oh no, they're back. Are they back? Yeah. Okay, I think that MGen saying there are known internet issues in Australia and South Africa at the moment. I think it may be one of our software issues. But I haven't said that. No, that's not right. Otherwise, I'd be glitching. Right. Let me know, guys. I'm gonna have a bit of a catch up with you guys in chat. Let me know if it's an issue on my side as well. So let me know if I drop out. I have got the stream on as well in the background, so I'm able to keep an eye on it. In fact, I'll tell you what, I'm going to take them off for the time being. Ooh, hello. Hang on. Let's move me. No, other way. Ooh, there we go. So a bit of a catch up with chat. Success. I'm assuming that's supposed to be success. Creative name, I love it. Hi, I've just joined the stream thinking it was a trading channel. This is this the new version of Top Gear? No, do not panic, man. We are getting into the trading. Markets are just a bit flat at the moment. Not a lot going on. We've got no news, no volatility. The markets are a little bit sideways. So we thought we'd have a bit of a chat about cars. I do apologize if we are boring you, but do stick around and do make sure you subscribe because we do trade here. In fact, currently this is a live funded 100k account with which I am trading. But unfortunately, just not seeing anything in the markets. You can see EU is just absolutely sideways. GU's just not clear. I mean, it is trending to the downside. It's just not clear. EU
Check
is
the hourly on GU, mate. It's flat.
GU on hourly.
It's flat.
Yeah,
mate.
yeah. There you go. Yeah, exactly. Yeah. So GU on the hourly is flat as a pancake.
She ain't going nowhere.
Euro is going even less places. It is completely. It's just fallen asleep. And gold, in fact, gold's the exact same. Again, gold is just going nowhere right now. So this is what I predicted earlier on this morning. Just want to see something happen, but we'll have to see.
Yeah, exactly.
So yeah, do not panic, my man. We are a trading channel. We do trade, but we do like to have a bit of a conversation when the markets aren't doing market things.
Are we expecting price to carry on like this until we get the interest rate out of the US on Wednesday?
Yeah, probably. So I think we'll get a little bit more volatility. I don't know. Like I said, it's December price. I say this to everyone. Like the last week of December and the first week of January, so like a week before Christmas and a week after Christmas, is usually like the chance to just walk away from the markets. You know, I'll trade. So I'm thinking about doing a challenge. I'm thinking about opening up a personal account with £100 in it and just having a bit of a play. You know, just having a bit of fun on £100 account. And I'll do it live on the Fivers with you guys as well. You know, I'm just gonna have a bit of a play about. But I'm probably on this account. I've probably got about a week left of trading. We are actually. I brought my. Oh, Rich gone again. I was going to say Rich was very quiet then. So this is my monthly for December. So November I earned $100. It's a break-even month for me in November. December I'm up a total gross profit of $334. Paid $28 commission, so $371 net profit for December. I probably got about a week left of trading this account before I retire it until the new year, and then probably open up. I don't want to open up a demo account. I want to have a bit of fun. You know, think about it like a Christmas party. You know, yeah, our version of a Christmas party is just chuck in, even if it's just 50 GBP, £50, £100, like a real micro account, and just see what I can do over the Christmas period. And then by the time I actually, kick my funded account back into gear in the new year, I'll just like full margin the account and see what happens. Are you guys
Are we
back?
kind of back?
Yeah, I think so.
I don't know if
Yeah.
we're back, mate. Like it's reconnecting, it's
Yeah, I know.
disconnecting, reconnecting, it's
Yeah.
disconnecting. Things are just doing this on my screen, and I don't know. I don't know.
That's right, guys. You just pop in when you can. I'll have a catch up with that. As long as the guys keep chatting to me, then it's all good.
Yeah, because we apparently can't.
Yeah.
Yeah.
Yeah, exactly. Kanban saying success. You want to trade? You want to trade what? Not moving market? Relax, brother. Absolutely, man. Yeah.
Yeah,
Dude,
chill out.
if the markets aren't moving, don't force it. Just relax. Maya saying, when boys talk about cars, everything else becomes secondary. I mean,
that's fair. That's kind of funny.
yeah,
but
you can't really argue.
I will
with
say,
that.
though, you have to realize we're coming up just before Christmas, right? This is the end of the year. We got the Fed tomorrow. No one's going to be trading, right? We had days off last week with the US, right? So we're in an abnormal trading environment in general as well.
Yeah,
So to try and make any kind of hot
legit
shot
judgment.
expectations,
Yeah.
it would be naive. You'd be taking a coin flip rather than
Yeah,
qualified
100%.
knowledge, right?
That's right.
I mean, Maya
Sorry.
Trader also said it well later on. She said volatility is the lifeblood of a trader, which is true.
Yeah,
There's
definitely.
very little volatility.
100% true.
Well,
Yeah.
so it's just
100%. It just depends on some traders like little volatility, some traders like a lot of volatility. But either way,
Yeah.
traders love volatility. Traders need volatility. Like you can't get to a destination with a car with no wheels.
Yeah. And then
back
when volatility drops out, you just talk about the car because it has no wheels.
Yeah.
And that's it.
I mean, even reference cards, apparently. Guys, if you do have anything else you want to chat about, then we are more than happy to chat about anything else. But we just
Yeah, I was about to say it's a perfect question to ask. General context, whether it might not be the next 5 minutes, 15 minutes, that kind of stuff, but broader trends for a certain asset or something like trading strategy, psychology, any of that kind of stuff.
100%.
Anything that you guys
Doesn't have
are
to be
struggling with,
car-related.
or maybe you're not struggling with, but you're progressing on. You want any kind of
absolutely.
further insight or something like that we can add.
Yeah, like Al just said, it doesn't even have to be trading related, man. It can be how do we deal with the stress of being a full-time trader in our everyday life. It can be questions that maybe you're curious to ask traders that maybe you don't think of these questions, or they're like, oh, I'd love to ask a trader that on like how they deal with certain parts of life. And it doesn't have to be what are you seeing with gold right now. Ask anything.
Or for instance, yeah, exactly that. Like questions that you do this and you've chosen to trade and that kind of thing, but you don't have friends that do and they don't understand it.
Yeah.
So you can
Exactly.
an option to ask other people that have been through the whole thing and understand how other people don't understand trading, investing, all that kind of stuff. And now you're in a good space that you can ask that stuff and people get it, because that's definitely I would say a big one for most people, is that others just don't they just don't get it. Frankly, they just don't get it.
That 100%. So I had the pleasure of being able to, and you guys know who I'm on about, but I'm not going to dive into too much because he's like my personal rant buddy, and not often do I do this, and this is the whole reason why I actually created the Apex Brotherhood. It was to create a community, and this was before I joined the Fivers, and well, actually no, I think it was as I was joining the Fivers, and it was just because I didn't have a space where I could vent, and I didn't have a space where I could chat to people who knew what I was going through. And I've got a very entrepreneurial family. My parents own a business. My brother's self-employed as well as working on the family business. So we're all very supportive of each other. But nonetheless, they still don't understand trading. And you'd think that entrepreneurial parents would still be able to be like, yeah, trading 100%. If that's how you're earning money, that's how you're earning money. They understand that businesses differ. Even then, they still struggle to comprehend what trading truly is, especially when you try and like explain the prop industry. It baffles them. They're like, we can't understand. We just can't comprehend this. So it is difficult talking to family, and certain talking to friends. Like family will listen to you even if they don't understand. Friends will
Yeah, there's at least
they're not even interested in listening to you.
yeah.
I listen to you, mate.
That'll inverse. That'll
Because you're now a
sometimes
trading
inverse.
friend.
Sometimes you have friends
This
that
is the
will
point.
actually be like, okay, yeah, and your family will be like, what the hell, man? Right?
Yeah,
So
exactly.
I feel like it's one or the other,
Yeah,
right?
100%.
So,
Yeah, 100%. And that's why I got the pleasure of being able to vent for the first time in a few months. About trading, about my life in trading, about my P&L in trading, about my psychology and drawdown and everything. I had the pleasure of sending a 20-minute voice note, just venting about everything that I'd gone through in the past few months to another trader who's a very close friend of mine. And it was super nice because like he vented to me, I vented to him, and we were able to say to each other, just, we're super grateful that we've got people in this industry like Rich, like LJ, like Richard Wells is a fantastic example as a psychologist, as a performance coach. He really dives deep into psychology.
yeah.
You guys in chat also have us. Like, don't think that you have to. Oh my God, they're amazing. They're live streamers. No, guys, we're the exact same as you. We've been through it. We're going through it, or we're to go through it. Talk to us. Don't. And this is the luxury of being about being live on stream is you're not watching a pre-recorded video. I mean, some of you maybe, but if you are watching this and we've already been live, then see us tomorrow morning. No, see us tomorrow when we're live again. But come chat to us and vent to us and talk to us about maybe things that you're worried about, things that you're curious about. Talk to us about it.
I think it's one of those things where you come to realize that trading isn't just trading, or being a trader isn't just trading. It's all of the facets that attach to it in some way, shape, or form. Your psychology is going to impact your trading. Your strategy is going to impact your trading. The market itself, the volatility of the market is going to impact your trading. There's so many things. Like LJ was saying as well, and Will was saying just now as well, the idea is that you do this not only for yourself, but for existential reasons as well. There's other factors in your life that's the driving force behind the decisions that you make.
Yeah.
But in this case, if you're going to take trading, or if you're going to make a decision about trading and say that this is going to be the thing that I'm going to focus on, you can't just focus on, the market is showing me buy now or sell now. There's so many factors that you need to incorporate as well. And it's important to discuss it. Right now, the market is incredibly flat. We're building up for something. What's the word? We're condensing right now. If you have a look at the euro on the 5 minute, if you look at pound on the 5 minute, something slowly, it's compressing, it's getting closer, and we're waiting for something to happen. And the question is, are you going to be ready when that something happens? Yeah. So it doesn't help you try and force it now. There was somebody that earlier, let me go and see.
Difficult. Why are you talking rubbish, mate? What is this? What is this? Why are you talking rubbish, bro?
I see why they don't.
You're in here regular, but mate, what are you doing? You're talking smack, right? Like we're clearly consolidating in a tight range on gold. You could go either way.
Sell gold now.
Surely you can see that, right?
Yeah, Catherine Pastor Camp said,
flip a coin, bro. Flip a coin. Come on.
Yeah, could we have a look at EG? I'm planning to go long once price breaks out of range, target 0.8778. Now, I like that because the fact is you're waiting for a break. Catherine, in this case, is realizing that we're consolidating right now. Things are slow during a session where technically there's supposed to be higher volatility. You have more market participants during this session than you do, for argument's sake, the Tokyo session. And we're just not seeing the volatility right now. We do have very high impact news coming tomorrow as well as Wednesday, particularly from the US, unemployment claims, and then the federal fund rate. And the thing is, if you're going to try and force a trade right now, you're gonna get smashed, because the moment it starts breaking, it's going to break with volume. It's going to break solidly. And unfortunately, right now, we're kind of stuck. It's a very small range. I do like what Catherine said about once it breaks, I plan on going long. Be patient. Just have patience. Wait for it to provide you with what it is that you're looking for, and then react. And be ready to react, let's rather say.
So I was going to say, I highlighted a couple of questions, which, I don't know, maybe you guys have some extra input on as well, because you guys trade sort of, in particular, some shorter like time frame stuff, right? So
can someone
what's
share
your
an idea
thoughts
on how you navigate different timeframes on TradingView without having to see other timeframe analysis? I.e., if I did one on the 5 minute, I do not want to see the same when I switch onto the 15 minute. Wow. Okay, that's
Why not though?
that's a really interesting question. Really interesting question, because it depends what you want to see on those timeframes. Like, for example, I don't care about entries on the 4 hour and the 1 hour compared to I will on the 15 minute and the 5 minute. So I'll look at different timeframes for different reasons. So in fact, let's stick. So Euro GBP, there we go. So I know one of you guys asked about Euro GBP. So let's look at that, for example. I'll give the reason what I mean. So we're currently on the 4 hour. What am I looking for on the 4 hour time frame? I'm looking for areas of, target areas. I'm looking for areas of consolidation. I'm looking for highs and lows. So therefore, I'm going to mark out potential target areas. I'm going to mark it potential highs and lows. So that's what I'm looking for on the 4 hour time frame. Now, what am I looking for on the on the 1 hour time frame? Something very similar, except it's a little bit more precise. So think about the 4 hour. The 1 hour is a precise or an accurate version of the 4 hour, and the 5 minute is an accurate version of the 15 minute. So, and I'll dive into that a little bit deeper. What I mean is the 4 hour, I've now marked out potential areas that I want to be targeting, or pulling back to, or for just areas of interest. So therefore, we've got an area of interest up here, area of interest here, area of interest here. We've now broken out of this area of interest on the 4 hours. So there we go. The 1 hour, we've got a breakout, maybe a retest. What am I seeing on the? Can I narrow it down on the 1 hour? So I'm looking at 1 hour interest. So we got this area here, which we're sort of respecting. It's not that nice. It's a little bit, I don't like it. So we got 4 hour interest here. I'm going to narrow that down a little bit, be a little bit more precise with it, a little bit more accurate. Think about it like a sniper compared to just blind shooting a rifle. So blind shooting a rifle at a small target would be a 4 hour. Drop down onto the 1 hour, you're putting a scope on it. Drop down to the 15 minute, you're getting a better scope, and then a longer range rifle. You're modifying, specifying your criteria. So that's what I got here. We're looking at a certain range. So now I've narrowed it down onto the 1 hour. What are we looking at then on the 1 hour? We got highs and lows, because now we're starting to look at intraday swing points. If I can draw a bloody straight line, which I can't. Let's try that again, shall we? There we go. Fantastic. So, like I said, we're looking at 1 hour swing points. We've got highs, lows. These are areas of interest. Now what we've done, we've marked out higher time frame area of interest. We've dropped down onto the 1 hour time frame and marked out swing high, swing lows, and sort of made the areas of interest a little bit more accurate. So therefore, the higher time frames are a different type of analysis to the lower time frames. Now let's move on to the lower time frames. 15 minute. So the 15 minute, for example, is going to be a lot more accurate. Here, I can potentially find my entry criteria. So what am I looking for in the 15 minute? This is where I'm looking for my structure. So I'm going to look at current highs. So we've got swing highs. Come back. There we go. we've got a swing high up here. Guys, if you can't tell, my mouse is dying. I need to go to the shop and get some batteries. So there we go. Now we've got our consolidation point. You know, come back. We've managed to identify this zone here of consolidation. We've managed to identify this swing low. So now we're currently in this consolidation. What do we want to see? Well, we want to see a break for a start. We want to see either a break to the upside or a break to the downside. What we can do then is when we see that break, we can then drop down onto the 5 minute and refine that break even further by saying, right, okay, now we've got consolidation here. You know, we've got consolidation here. Let's assume that this consolidation is up here, post breakout to the upside. Plus we've got 4-hour trend, which we've broken and closed above the 1 hour swing point. You're adding confluences. So that was a very deep answer to that question. If I've confused you a little bit, feel free to, ask me on it. But so what I've done then is I've done different types of analysis. So I'm not confusing myself. I'm not asking myself, can I find an entry on the 4 hour? And I'm not asking myself, can I find areas of interest on the 5 minute? So that saves the confusion. You're not going to put let's say a Western saddle. So like a Western saddle would be a trekking saddle on a horse. It's for long distance trekking. You're not going to put a trekking saddle on a racehorse. No different how you're not going to put a racing saddle on a horse for a long journey. Do you see what I'm trying to say here? You're not going to put an entry criteria on a 4-hour time frame unless you're swing trading. And likewise, you're not going to look at a 4-hour time frame on a 5 minute because you're going to see a lot quicker price action.
Yeah. Sorry, guys. I've had some stuff pop up. I'm going to have to dip out. So I'll see you guys later.
Didn't problem.
All right, JLJ, mate.
Ciao for now. I'll see you guys tomorrow. All the best. There's a couple questions here that you guys can run through. So
awesome stuff. Nice one. Cheers, JLJ.
Ciao.
See you later, bro. Have a good one.
Have a good one, mate. Can we just go back to that previous question from Anton Gaharo?
This one here.
Yes.
Yeah.
My question would be the last portion. If I did one on the 5 minute, I do not want to see the same when I switch to the 15. Why though? Why would you not want to see the same? If the 5 minute, for argument's sake, is where you are trading and you're seeing a specific movement on the 5 minute, wouldn't it make sense if you went up either one time frame higher or 2 time frames higher, that you see something that's in line with what you're seeing on the 5 minute? It's that idea that you have multiple confluences that are confluencing together, and it strengthens the idea. It strengthens the idea that you're seeing, or what you're seeing on the 5 minute, makes it a little bit higher probability because on the higher time frames, it's aligned. So I don't understand why you would want to only view it on one specific time frame and not see that same thing on the 5 minute as you would on the 15 or the hourly or something like that. Doesn't make sense to me. I do trade one time frame, but I do my analysis on multiple time frames. Mm-hmm. But I surely the idea would be that you want to see what you're looking for on the 5 minute, as an example. You want to see it one time frame higher and one time frame lower. It just adds that confidence that, okay, on the 5 minute I'm seeing it's bullish, on the 15 minute I'm seeing it's bullish, on the I don't know, if you drop down to the 3 minute, it's also bullish. If I go up to the half hour or the 20 minute or whatever, they're all still showing the same thing. It's alignment is what it is.
Yeah, if, for example, someone said to you, I don't know, let's say, I watched the Formula One the other day, yesterday, so let's say Lando Norris. If someone said to you, in 2 months' time, Lando Norris is coming to Wales, I'm like, cool, that's awesome. That's the 4 hour time frame. Then if someone else said to me, dude, in a couple of days' time, Lando Norris is coming to Wales, I'm like, oh my God, that's super cool. If another person then said to me, dude, Lando Norris is in Wales, I'm starting to believe that Lando Norris is currently in Wales, or coming to Wales at least. If then someone said to me, dude, Lando Norris is in Wales right now, and then someone else said to me, no, he's not. Lando Norris is coming to Wales in 2 weeks' time. And then someone else said to me, no, it's not, it's a month's time. I'd be like, okay, look, Lando Norris is clearly going to come to Wales, but I'm not sure when, because it's not right now, because not enough people are telling me right now that he's coming to Wales. So therefore...
Yeah, but even with your example, all three people gave you different information.
Yeah, exactly. So therefore...
Over a different time.
Yeah, so wouldn't you want to see everyone align? So just backing what Rich said up, backing him up with what he said, that's grammatically better. Just backing what Rich said, I've done it again. Just backing up what Rich said, when you're on the 5-minute time frame, wouldn't you want to see the exact same on the higher time frame? Because wouldn't that be confluence stacking?
Yeah, that's what I mean. It gives you that confidence that on the slightly, let's say the mid time frame, let's say 1 hour to 4 hours, we're bullish. We might not be bullish on the daily, the weekly, and the monthly and whatnot, but we're clearly bullish intraday. We're clearly bullish on the daily, that kind of like thing. If I go down to the 5-minute and I see the exact same thing, I'm confident that this thing is going to potentially carry on being bullish, because all of the higher timeframes that I'm interested in converge onto the same idea, and that is that we're bullish. What I think happens is that a lot of people, they want to only focus on a singular time frame, and you can do that. There are very profitable and successful traders that only focus on a singular time frame, but I'm almost sure that they're very sparse. There's very few of them.
Yeah.
I'll give you an example. Griff, that rocks up on Tuesdays here by us, he only trades the 1 hour. He's very successful. He's very good at what he does. He only focuses on the 1 hour. So it's not impossible. But you need to be very, very clear on what it is that you are looking for specifically on the time frame that you plan on using. If you're going to use the 5 or the 15, and only the 5 and the 15, you're going to have to be very particular about what it is that you're looking for.
Yeah, yeah, 100%. And for example, backing up what you said, this is the 4-hour time frame. You could argue on the daily, we're bearish. Actually, no, to be fair, we're still pretty bullish. On the 4-hour, currently, this trend here, if I let's get the arrow up, is down. You know, we are currently bearish.
Lower highs, we've printed lower lows.
Yeah, exactly. Order flow dictates to us right now that we are currently bearish. Then we look at the 1 hour. In fact, let's jump back up to the 4-hour. The 4-hour, we are currently here putting in or trying to move a little bit higher. So again, what is order flow? Order flow is just the structure of higher lows and higher highs, lower lows and lower highs. So if we think about it, we've got to understand where are we currently in our direction of flow and how are we looking in this trend. Now, this is, let's say that this is UG, Euro Pound. So this is Euro Pound at the moment. We are currently right now, as of this moment in time, here. So therefore, in the theory of lower lows and lower highs, we need to come somewhere around here as a pullback. In theory, not saying this is facts, you know, it may not happen. Therefore, on the lower time frame here, we can trade the pullback and then entry to the higher time frame. So the lower time frame may look like this, which may look incredibly bullish, which again, I'll show you in just a second because it is suggesting bull movement. And then, so this is the lower time frame, moves up into the pullback, and then the higher time frame kicks in, and then we continue on down. So again, higher time frame, overall bearish, lower time frame, bullish. So we drop down to the 1 hour. Again, we are putting in higher highs and higher lows. We move to the 15. We're putting in higher highs and higher lows. We're actually consolidating, but if we want to buy, we have to see higher highs and higher lows. But that doesn't mean it's the same on the overall time. So it doesn't necessarily mean you're counter trend trading. But what it does mean is, like Rich said, you need to know what you're looking for and how long you're looking to trade it over. That's why I say, don't look at the 5-minute time frame like it's the 4-hour and hoping that you're going to hold a trade on the 5 minute and you're going to hold it for a week, because if that's the case, you need to be looking at a larger time frame, like the 4 hour or the daily, where you're seeing a larger space of time and the movement over that larger space of time. Whereas if you're looking for a quick in and out, then maybe you're looking at daily bias, not weekly bias.
Excuse me. That came out of nowhere.
HK, now I see everyone. There's no problem with Willie's side. I'm glad. Consistent old Willie. If you need some volatility, I can always ask Trump to tweet something quickly. Dude, I asked Trump to tweet something quickly the other day. He just tweeted it too late. I've already gone out. High fivers. Yo, what's good? Here you are. High fivers. I'm sorry, I just cringed myself out then. Has he dropped out again?
Oh, no, I'm still here.
Oh, he's just speechless by my endless cringe.
I was just waiting. I was actually reading one or two comments.
Awesome. In the meantime, while Rich is reading some comments, guys, do not forget to smash out that like button. There's a few hundred of you in now, which is a pretty awesome to see. Make sure you smash that like button, and if you are new here, make sure that you do subscribe to the channel. We are here dropping absolute bombs of wisdom and bombs of gold on, maybe even gold. There we go. We're on gold. Dropping bombs of gold in the markets today.
Nuggets.
I like that. Little nuggets of gold.
We don't want to drop bombs for gold.
No. Dropping nuggets of gold and bombs of wisdom. Bosh. There you go. So, guys, yeah, do make sure you subscribe and stick around, turn that bell notification on, and make sure you smash out that like button as well. It means a lot to us. You're not going to get this sort of camaraderie, banter, conversation, and wisdom and experience anywhere else. I don't care what you say. You're never going to find these two absolute legends live every single day anywhere else. Well, there is one other location.
Well, there is one other place.
There's one other location.
For the sake of this stream, it's only on the Fivers. Tim Sheldrick is saying, I trade a live account successfully, my own money, but keep blowing evals too aggressive. Do any of you struggle to keep the same discipline on an eval? Now, somebody has already answered this on behalf of us, and I think it was Maya, which is great. The thing is, when it comes to your own personal account, it's the idea that you have investment. You have your own finances that you have put into this idea, and if it goes against you, you're going to feel like I have physically lost something. But when people trade evaluations, they kind of disassociate the value of the account to the price that they paid for that account, as an example. So if you have a 100K account and it costs $500, you view it as, don't worry, this is only a $500 investment. You don't even look at it as an investment. You just say, this is $500, don't worry about it. So you kind of diminish the value of that account for yourself because you're looking at how much it cost you. And then what happens is you don't go into it with the same discipline as you would have with your, let's say, your personal own money accounts, because that account that you have, if you were to lose that, let's say it's a $5,000 account, it's $5,000 of your own money. It's blowing away. It's gone. What I found is the best way to approach an evaluation account is to view it as if you had a $10,000 account, as an example. So you just purely take the drawdown that you have available.
You trade the drawdown.
And you imagine how would you trade a $10,000 account had it been your own money. So I would imagine $10,000 is a lot of money to just throw away. So I am going to approach it as if that was my money that I'm trading. And the thing is, you will then start realizing that the value that you've placed on this 10K drawdown means a lot more to you. So you're either going to be either scared to trade it, or you're going to be more disciplined while trading it. So, I mean, if I lose an evaluation account, I can just take another $500 and pay for another account, no problem. But if I lose my personal account, I'm going to be devastated. Because it's substantially more and it means more. So if you get to that point where you're like, okay, you're either going to trade with more discipline or you're going to trade with fear, you can then tackle the fear. You can take that on. Because if you're really trading with discipline, that's sorted. You've got the discipline now.
Yeah, what helped me was if you trade a demo account, and I mean demo account, not like it's a demo account, full margin NFP. Don't do that, please, whatever you do. On any account. But if you disrespect the demo account, then you can't respect the normal account. But if you respect the demo account and treat it and trade it like it is your career and you can prove yourself profitable, why not hook everything onto the back of it? There are such things as trade copiers, and they are God's gift to the trading industry. They really are. They're fantastic tools, certainly to increase your portfolio and especially to time manage when trading with certain accounts. Why not hook an evaluation account up to your trade copier, hook your personal account up to a trade copier, and have your master, so they'd be the slaves, and hook your master account up as the demo account. Now, what that does is it eliminates emotion, or certainly reduces emotion, because you'll forget that you've got real accounts hooked up to the back of it. And as long as you're disciplined, and as long as you have a good strategy, and as long as you solely and focused on the trading outcome or the trading sort of process, and you know that you're profitable, you know that you've got a great strategy, and your psychology is top notch, then you're removing other psychological factors. For example, like
Yeah, it seems as though it is. Because Mike is also talking to Jonatan about EVMAX.
Oh, fair. Oh, there you go then.
Yeah, it's simply just unstable.
Oh, hang on. Are we back? Are we back? I think we're back.
Yeah, we're back. We are back.
Hello, everybody. Are we back? Let us know if you can hear us okay. And I can't remember what I was saying. But yeah, basically the gist of what I was saying was jump onto a demo account, hook the important accounts up to the back of a master account, and the master account being the demo removes all that expectations and unwanted psychological implications. That threw me off the swing of things a little bit.
Yeah, it is one thing when you're trying to, or you're in the flow of explaining something. The next moment it just goes black screen. This is like, okay.
Maya's got a great question here as well. Do you guys take holidays off? If so, when are they? Rich,
We try to.
Do you take your holidays?
I try to. I base most of my trading around the US and pound bank holidays. So if there's a US bank holiday but not a pound bank holiday, then I know that the London session will have sufficient amounts of volatility that I can trade it. Where the US, it's non-existent. Then I'm just not going to trade the US session. So
Holidays
Christmas,
meaning not
New
looking at-
Year's, those kind of like Boxing Day, that the 25th, 26th, that whole week leading into the New Year, and then maybe the first 3 days or so after the New Year. I kind of just give the market time to just bring most of its participants back and then see what it wants to do from there on. So from, let's say, the 24th of December until roughly the 2nd or 3rd of January, I tend to have nothing open. Like, everything is completely closed down.
Same as that. I'm trying to think about other days. My birthday.
No, I trade my birthday, mate.
Do you? I don't, because I don't want any psychological implication on my birthday. I just take it off. I just stop trading. Usually I'll go out with family, or I'll go away. So they're days that I take off, like my partner's birthday or my brother's birthday, or just family birthdays, important birthdays, I'll take off. But holidays, US bank holiday, I won't trade, but I'll still look at the market, so that doesn't really count.
True.
Christmas holidays, I won't even look at the markets. So, and that would be December 25th. I'll look at the markets on the 24th, but I won't trade. So December 25th until probably the 3rd of January. I think they're the only days I fully don't even remotely look at the markets. I don't really think there's any other day that I wouldn't look at the markets.
Even my birthday, mate. It's like I've had 37 of these birthdays already. So to me, it's just
fair.
Another day. I really do not like place any sort of like massive importance on the day. It would feel like a waste if I did not try and trade on that day and there was action available in the markets. I mean, my birthday doesn't land on a public holiday or doesn't land on a bank holiday, so I'm
fair.
down my available days for trade by one more day.
That's a fair point, actually, because I traded my birthday last year. This year just gone. I traded on stream. Do you remember? Yeah, I had my birthday on stream. So, and the year before, actually, because I was trading with Richard Wells, and he wished me happy birthday. So fair point. Yeah, I was wrong. I trade my birthday. I
celebrate the birthday after the day of trading. Like, you can go out that evening, go and spend time with the family and all of that kind of like stuff. The way that I view trading is I view it as a day job. I view it as I wake up in the morning, I come and sit in front of the charts, I trade the day. I have a start time, I have an end time, and everything after that, I've got stuff that I need to do. Anything before that, I've also got stuff that I need to do. But those things, the time before and the time after, are planned. So I will schedule my day. And trading is part of that schedule. My birthday, I don't get to magically just sit up and not wash the dishes, mate. It's not how it works. When I used to have a day job, a normal day job, I would go to work on my birthday. It's one of those things.
Exactly that. Yeah,
so
true.
I approach it in exactly the same way.
Yeah, fair. If that's the case, then I'd probably take a week, 2 weeks off max a year, and that would be
give or take.
Yeah, that would be during Christmas times.
Yeah, and obviously because we're doing the streaming as well, there's days where the streaming itself takes up enough time that you're here already.
Yeah, exactly. There will be days that I don't stream. Like for example, I'm flying to Hong Kong in January, so I'll have to take 2 days of streaming out of that because I'll be flying, and day 2 hopefully trying to recover from jet lag. So hopefully it'll only take me a day.
But it's the whole idea of you're also moving. So
Yeah.
you're already
Having said that, though, I
You know,
streamed in the airport, man.
no, but what I mean is like with you moving to Hong Kong as an example.
Oh, okay, yeah, fair.
It's not just,
Yeah.
hey, I'm quickly going to go and visit someone for a few days in a different country. No, you're literally moving house.
Yeah, I'm literally moving country. Yeah, to be fair.
So
So,
the thing is, the expectancy is that for that time frame that you're moving, you're not going to be trading regardless.
no, yeah, I won't even. I probably won't trade my live funded account for a week or two during that moving period.
Where if we're just talking about holidays or when you take a holiday, it's just when there's no market action, and that's usually
Yeah, literally.
this holiday season where we are entering now.
Yeah.
There was another question that you wanted to bring up, mate.
Was it? Ruby saying it's all good. Thank you very much, Ruby. Do you mean if you can? Maya, do you mean that if you can crack evals, it increases discipline? I mean,
I think Maya is talking to Tim.
yeah. I mean, I suppose so. Going off of what Maya's saying, I'm sure she can answer this for you, mate. But
Cracking evaluations is not a big deal. You can even pass it by chance one day. It's managing the funds account or the funded account for long and not blowing that develops discipline.
yeah, discipline is understanding that the account's going to be there for a long time.
Yeah, that's what I actually meant, having passed many evals, but then get all excited and blow the account before payout.
Yeah. So if you think about it,
wouldn't you say?
say again.
That's more of a greed thing, wouldn't you say?
I'd say it's more of an emotional thing, more of because yeah, I see what you mean by greed, but I think most traders get emotional under the excitement of this is now real. I think a lot of traders are like, "Oh my god, yay! Oh my god, I'm gonna get paid! Oh my god, I'm gonna earn money now."
There it is. I
Yeah.
want to earn money now. That's
So
what I
think
meant by greed.
it's more of like an impatient thing.
Spent X amount of time to pass this evaluation. Now I want to make up for that time.
Like right now as well. Like they don't want to wait 2 months time for a valid center.
Money.
Yeah,
That's the point. Yeah. That's what I meant by greed. Not like you're a greedy person. You just
fair.
want money.
Yeah, fair.
It's the
I get you.
greedy side of emotion that's coming through.
Yeah, I think that's the downfall of a lot of people in phase. I call it phase 3 because your first payout is always still a test phase because of this exact reason that we were just chatting about. You know, phase 1, phase 2, and then phase 3, which is that impulse of excitement and just absolute wave of emotions and excitement and nerve wracking, and it's just of nerves and just everything hits you at once that you're now a funded trader. So phase 3 is your payout, then you get bored and the novelty wears off and you're like, I'm a funded trader now. It gets boring, you know. So yeah, there is that. But I don't know. That's why I say,
when it comes to discipline, every moment that you're at the market, you have the opportunity to practice discipline. It's not like you're going to get discipline because you now are trading a larger account or now that you're funded.
100%.
You need
That's why I say build discipline on a demo.
Yes.
If you can build discipline on a demo account, hook it up, hook everything up to that demo account, you'll forget about it. Like I said, the novelty will wear off. You're like, oh god, I forgot I got accounts hooked up to this. Dude, I did the same with this. I've got accounts hooked up to the back of this, and I was like, would you look at that? I got accounts hooked up to the back of this, and I forgot about them. You know, it's the same goes. You stick to discipline. If you can be disciplined on a demo account, you can be disciplined on a personal account. If you can be disciplined on a personal account, you can be disciplined on a funded account. It's all the same. You're attaching this expectation and emotion to the accounts that you're trading. Don't treat every account like a demo account. Treat every single account like a demo account. Hook it up to a trade copier. Hook it up to a demo account, actually. But I mean, you've got to be careful then with different trading. But again, that's another conversation for another time. But yeah, just try and eliminate as much emotion to it as possible.
Yeah, it is difficult to disassociate emotion from the action.
Yeah, of course it is.
People take years and years and years to like work on that every day, and they still don't get it right. Obviously, there is a big difference between the let's say the outcome, the ramifications of trading a demo account versus an evaluation account, or even a physical self-owned, let's say your own money account, personal account. If you lose a evaluation account, there is some financial losses, but generally you're provided with another opportunity. A demo account, if there's losses, there's no financial loss whatsoever. It is a time loss. It is a input loss. I've put in something into this thing and I've gained nothing from it. Blah blah blah. That kind of like if you view it as such. But a personal account, if you lose a personal account, that usually carries with it quite a significant financial loss.
Yeah.
More so than an evaluation account, and then obviously infinitely more so than a demo account, because a demo account has no physical value attached to it, financial physical value. So I don't agree with the idea that you should treat them the same. What I think you should do when you have those three different accounts is you should approach them with the same mentality, but understand that they're different and that they're used for different things. So they should be different enough, distinguished enough, that you know that for a demo account, you can learn how to get objective data from it by trading a demo account. You can download this information, you can scrutinize it, you can go through it, and there's no financial loss that you're going to have while trading a demo account, as an example. So you're free to experiment with a demo account. And you can get real objective data from it, because you're more often than not, you're forward testing with a demo account than you are, for argument's sake, back testing via TradingView. The difference comes in with the evaluation account and a personal account, because there's a lot of people that they trade their personal account as if it is a gambling account.
Mm-hmm.
I'll chuck £100 in here, I'll chuck £200 in, and we'll just see what happens. And they kind of like carry that same thought process through to an evaluation account, where on the evaluation account, they also like really try and gamble. They try and pass it as quickly as they can. You know, it's pass or fail. You know, I'm either going to pass this account or I'm going to lose it. So what? But if you treated that the same way as you treated your or if you had the same idea with your personal account, where it's like, oh, well, if I lose this money, so what? I lose this money. That is gambling straight up, because you're just going into it with the mentality of, I'm either going to make a lot of money or I'm going to lose this money, and that's it, and I'm fine with that.
Yeah,
So
exactly.
you're approaching it in the same way that a gambler would approach going to a casino. I'm here to either break the casino's bank, or I'm going to lose the money that I came here with. Whatever. So
It's
I think there's a different way that people will approach it, and to me, it cannot be the same. You cannot approach them in the same way, but you must understand that there's differences between them and that they have their own space, and you should treat them differently, but you should approach them with the same mentality of not being a gambler, but being someone that's wanting to learn, that's wanting to build a good, proper system, let's rather say, and then following that system.
Yeah, everyone treats accounts differently. The most important thing you can take from what we are saying is that you give them the respect they deserve.
Yeah.
You know, and that's the most important lesson you can take away from anything. That's like asking a day trader, swing trader, why they don't scalp, and a scalping trader why they don't swing trade. You know, everyone trades accounts differently. There's boys in our community that you'd swear they don't respect their personal account, but they respect it more than they'd respect any other account. But that's not necessarily the right answer. However, it works for them. But what they've started to learn is that they were actually given more respect to their personal, doing exactly what Rich is talking about, given more respect to their personal account over their prop account, and instead they need to be given equal respect to each account. Doesn't mean they have to trade it the same, but they must give the respect the same as they would with any other account.
Yeah.
Seeing a question from HK over here saying, Wills, what's the benefit of living in Hong Kong? There's a few, to be fair. I mean, there's low tax. There's no tax on anything up to 50,000 GBP. And there's only like 8 or 9% tax above 50K. And that's all the way up to like a couple 100,000. So that's pretty cool. But no, more importantly, my partner's from there, so that's where her family's from. So I suppose that's the reason. That's the important one. That's the benefit. But the benefit's the tax. Come on, let's be honest.
It is a good benefit, mate.
Let's pretend it's
Yes.
I'm also interested in living in Hong Kong or Singapore. A friend of mine lived in Singapore for a while. His wife is Singaporean. I've never thought about Singapore. Apparently, it's stunning. Hadn't ever thought about Hong Kong until I started dating my partner. So for me, it was always like Dubai or I like Spain. I know it's not a tax haven, but I love Spain. I love France. I love the Alps. So I was looking at that sort of area. Dubai, if I was to have a tax haven, would have been my key place to go. But since meeting, my partner now and finding out that Hong Kong's it's a little bit of a tax haven. It's not 100%, but it's pretty cool. So yeah, not only that, she's got family. Oh, she's from there, so her family's there. So that's why we're going.
The good, the bad, and the Bitcoin. Dirk saying, when it comes to understanding risk to reward, I think good poker players make the best traders. They understand risk to reward and do not take losses personally. Now, this is a very interesting take, Dirk. I myself were a poker player for quite a while.
That's why we have poker night on Friday night. This legend teaches us how to play poker like a pro.
So the thing with this is that poker players, good poker players, the ones that try and look at it from the there's effectively two ways, but you know this, Dirk, but like maybe somebody else, the other people in chat don't really know this, but there's two distinct ways that you can approach poker from a I want to make money point of view. Now, obviously, there's the gambling side, but we're not referring to that. People just going in for the fun of it, just playing a few hands and winning or losing money doesn't matter to them. But there's two distinct ways. There's the mathematical side, which is what is known as GTO. It's known as game theory optimal. So those people would rely heavily on solvers and they would work heavily with information on the hypothetical, but on a mathematical side. So you would look at the percentage or the likelihood of a certain card or range of cards coming into play on a specific street and how that relates to my range, the range of hands that I can have versus the range of hands that my opponent can have. That is all data. It is backtesting. It is hypothetical. What if this strategy, if I were to play these range of cards, how would it, on a mathematical from a mathematical standpoint, how would it relate to profitability? And in this case, when you look at it from a trading person's perspective, you're doing the exact same thing. You're doing backtesting on a hypothetical. You have an idea. You have a strategy. You go and test the information. Now you've got data, and then you say, based on this data, there's a 57% chance that this strategy is going to net me money. So that is EV. That is the equity value of a decision. The other side is the emotional side. So it is the exploitative play. It's the people that he looks at Will and he sees Will every time he has a really good, like set starting hand, aces, kings, queens, ace, king, suited, that kind of like thing. His left leg starts shaking. And he when he's got chips, I have a bunch of chips here in front of me. When he has chips, he would, his hands would shake a little when he's about to put the chips into play. that is just somebody paying attention to what he's doing. Now that's the emotional
Poker players would hate me.
So those are the two things. So subconsciously, it's the psychological side, which is the exploitative play. I'm paying attention to what you're doing, and I'm looking at you, and I realize that there's a pattern to what it is that you're doing relative to how strong your hand is. That is exploitative, and that's the psychology side of poker, which is the psychology side of trading as well. So you have the mathematical side and you have the psychology side, and they work really well together. The problem is you can have all of the statistical data and still make a decision based on emotion.
Yeah,
within trading.
Yeah, absolutely.
As well as in poker as well.
Yeah, you still need to have that.
It's a balance.
100%.
So yes, I agree that good poker players do make good traders because they understand risk to reward, but you also need to remember that those same good players also fall short on the psychology side of things because they're focusing entirely just on the data as well. So I don't think it's a correlation one-to-one, but I do think that it's more favored towards really good poker players would in turn make good traders purely from a risk to reward standpoint.
Mm-hmm. Yeah, absolutely. I do fully agree with that. Yeah, it's the same with most disciplines. You know, they need to understand the game they're in, and the reason I say the game they're in, it's no different to using the industry is calling it the circuit, not literally gamifying it, but more so the fact that they're understanding the industry that they're in. They're understanding what their discipline is, and the best people understand that there's more than just football. There's more than just kicking a ball. There's psychology, rugby, tennis, cricket, golf. There's more than just the discipline itself. There's the psychological understanding of the probabilities, the outcomes, and the whole science behind the brain-body connection. Same goes in trading, poker, chess. Chess is a fantastic example as well with strategy. So they've all got strong disciplines and strong aspects that you need to master to become professional at that game, at that industry.
Good chess players would, in theory, make good poker players, and good poker players, in theory, would make chess players.
Oh, vice versa. Yeah.
So,
100%, absolutely that.
Yeah, it's the idea that you're trying to predict the outcome, but at the same time, if you're playing against another opponent, there's that personal factor. I'm playing against Will. Will is playing against me. I'm trying to predict how he's going to react based on the information that's on the board. And it's the exact same thing with chess. I'm trying to predict multiple moves ahead and multiple branches of information simultaneously while Will is making a decision. I'm trying to preemptively decide what I'm going to do in the event where Will makes this decision.
Yeah.
And you do that with poker, and then you sometimes do that with trading as well. There's also that correlation with that as well.
Well, it is. Instead of playing against someone, so for example, me playing against Rich playing against me, it's me playing against Gold playing against me, Euro USD playing against me, I'm playing against Euro USD. So I'm thinking, right, okay, what have I... And again, bit like poker, you're developing an understanding on what happens and a pattern. Does his leg twitch? Does his hand shake? Does his eyes look in a certain direction? Does he raise his lip? Does he...
it's those little tells.
Does he fiddle with his ring? Does he fiddle with his watch? Does he play about with the chip if he's got a certain hand or a certain a strong hand? Same goes with Euro USD. If Euro USD is strong, has it got a pullback? Has it got a momentumous move? Has it got consolidation prior to the breakout? Does it consolidate first? Does it run? Does it pull back? Does it do all sorts of... You develop a pattern, you develop an understanding, you start to see tell signs, and you're like, okay, boom, here it is. Here's my move. Here's my straight. Here's my royal flush. Here's my full house. Here is my pullback, my fib, my order block, my fair value gap. Here's my entry criteria that I'm thinking, here is the telltale that I have a stronger hand than Euro USD. and that is how you can correlate all disciplines like poker, chess, trading, and that's how most people become pros. And that is why the professionals are better than the amateurs, is because the amateurs say, let me look at gold. No, they just look at the price action. The professionals in the industry will say, don't let me look at gold. Let me understand gold. Let me develop a pattern on gold. Let me understand how it moves during this cycle of the market. That is how you become a professional. That is how you leave the amateur hour. We're actually going slightly
Euro
over.
USD, please. Salmansk.
I got it here. I just showed them now. One of the guys said, just wait for a breakout.
Yeah,
100%.
agree.
There's just nothing going on right now in anything. You know, GU flat, EU flat, XAU, so gold flat, even Euro GBP flat. Just everything is doing nothing. Nothing's doing
We've
anything.
been bouncing in this 9 pip range for the last 5 hours.
Yeah.
On EU. So
Yeah.
for the last 5 hours, there's only been 9 pips between the high point and the low point.
Yeah, literally that. I do want to see gold buying up, and I don't know. UG, so euro pound, I want to see go up as well. I want to see a breakout. Euro dollar, maybe the same as well. Seen as well. Let's go on. There we go. It's back. Oh, my mouse is dying. Let's reach our goals of 100,000 subscribers before the end of 2025, guys. We are coming to the end of mine and Rich's session, so unfortunately, we're gonna have to love you and leave you. However, we have got Samir joining now. Hello, Samir. What is good, my man? Hello, Samir.
How are you guys?
I'm good, mate.
Samir off guard, mate.
Was I here for more than 30 seconds?
Yeah.
Or I
But
just
yeah, guys,
popped up?
big welcome to Samir. If you haven't already, make sure you smash out that like. Let's get over 150 likes for Samir over here, guys. And if you
Let's
haven't
go,
already, make
guys.
sure you subscribe to the channel. You know, we are aiming for 100,000 subscribers by the end of December. We've got a few weeks left. I think we've got about 3-ish weeks left now. Let's see if
Yeah.
we can smash out 100K. I reckon we can easily do it.
We're starting to
HK,
get a little
100%.
now.
HK, that'd be super cool, man. Yeah, let's definitely meet up if you're in Hong Kong.
HK, how are you, bro?
The good, the bad, the Bitcoin saying, I lived in Singapore for 3 years. A lot of people I know in the finance industry lived in Singapore. That's really interesting. Lived in Singapore for 3 years. My Right, dude, I'm going to skedaddle and go have some lunch. I'll see you again at 2.
Oh, it seems as though we might be live again.
Oh, are we live again?
The software is crashing again and again.
Constantly, mate. Oh, we're live. It seems as though we're back in, mate.
Something is not right. Oh, yeah, we are live.
Yeah, we're good. We're live. Sorry, guys.
Alright.
We are experiencing some technical difficulties with the streaming software.
It disappeared again.